behind me, Hans Boone, Managing Director, Post Finance International Development, to introduce the next panelist and his panel. So without further ado, Hans, you have the floor. And the clock starts.
Yes.
I think this is you. That's me. I think this is me.
Everywhere is microphone.
Okay, maybe for the speech, if there's not much here,
Yes.
maybe you come down. When you get in, it's Tuesday. No, it's okay. Everybody has a chance. Maybe when we speak, maybe to take your seat.
Yes.
Otherwise, you're behind.
No,
It looks,
no, yes.
you know what I mean? And then when it's up, you sit. Okay, perfect.
A very good afternoon, ladies and gentlemen. It's a very great pleasure to open here the panel session for this afternoon's meeting on enabling conditions to expand from remittances to financial inclusion. And this panel is actually starting with the keynote speech of Dr. Sifundo Chief Moyo. And Dr. Moyo is the Secretary General of the Pan-African Postal Union, which is one of the players in the field of remittances and financial inclusion in Africa. So please, if you could join and address the public with this speech.
Thank you very much, Hans. Good afternoon, Excellencies and distinguished delegates. Firstly, I would like to express my gratitude to IFAD, the organizers of this wonderful event, for inviting me to share my inclusion with focus on the last mile corridors, given the role that my organization plays in that space. I am from the Pan-African Postal Union, which is an African Union specialized agency responsible for spearheading and coordinating postal development in Africa. And I will be talking about how the post office is coming into the area of remittances. And I know a lot of you have your own ideas of what a post office is, and I would want to start by defining the postal service so that we move together. The postal service is a platform that connects people through exchanges and flows of information, money, and goods. It is a network and pipeline that transcends traditional product lines like letters and parcels. Post offices neither detect nor decide how people communicate, but they endeavor to upgrade their capabilities and competencies in order to deliver services on the preferred platforms. Over the years, the postal sector has evolved, and currently post offices are undergoing digital transformation so that they are able to deliver services in various categories efficiently and effectively. You may want to know what role the post office plays. There are a number of issues that are covered by the post, because for a start, it is a developmental institution that provides affordable accessible and universal services that contribute to the socio-economic development of our nations through rollout of government programs and projects. Post offices also bridge the digital divide between rural and urban areas. But in this particular instance, I am going to talk a bit more about their role when it comes to financial inclusion. The question is, what does the postal network offer to the international remittances? First and foremost, the Post has unparalleled reach and network penetration. In Africa, we have 54 countries, and they have 25,000 post offices and 15,000 postal agencies, and most of these are located in urban, rural, peri-urban, mining and farming communities. And the good thing is that they have got power, electricity, and they have connectivity. Post offices also provide convenience of accessibility in that in rural areas, they are very close to where the people are. And in those areas, they are found to be very liquid, which enables them to do cash out transactions, bank withdrawal transactions, and remittance encashments. And post offices also offer the remittances service at very low costs. We heard in the morning that in Africa, the average is 8.64% as a cost, but post offices offer less in terms of the charges. And like I said, they provide linkages, most importantly, global linkages and reach, in that they are linked to 192 countries of the world through the Universal Postal Union, which has, which commands 600,000 post offices. And you can see that there's a lot that is being offered in terms of convenience. And post offices also provide diverse service portfolio over and above the rich financial services bouquet that they provide. And this bouquet includes banking services, cash out for mobile money wallets, money transfers, microfinance, bureau de change, digital money services, insurance, and all these are boosting the financial inclusion thrust. And they do have synergies with private sector players, where they are agents of international money transfer organizations like RIA, Mukuru, Western Union, MoneyGram, Small World, and World Remit. And this provides the diaspora remitters with delivery options up to the village level. And like I spoke of the digitalization thrust, postal entities have digital capabilities and flexible options in that they offer a wide range of other services like access to e-commerce platforms, tracking and tracing of goods bought online, as well as supporting rural economic development, trade and commerce. And in the process, they generate and manage big data, which is important for decision making. There is an aspect of the postal service which deals with complementary infrastructure like the national addressing, which is essential for ensuring that KYC that is required by banks is met, in that they provide addresses to the citizens. And financial literacy is also promoted by postal entities as they do some capacity building, educating populations in using financial and digital services. And I would also want to talk about the essential nature of postal services. Post offices provide services on a continual basis, even during disasters and pandemics. We saw during the COVID-19 period, during the lockdowns, post offices were delivering personal protection equipment, they were delivering drugs and food for people who were at home. And lastly, the postal network provides banking to the unbanked. We know that in Africa, due to the low incomes and lack of financial literacy, a significant part of the population has no access to banking services, and the post comes in handy, especially in rural areas, working in collaboration with mobile money transfer organizations to provide services that are replacing conventional banking as we know it. And finally, in conclusion, I want to talk about the strategic partnerships that are available, to say that the post offers partnership opportunities to established businesses, startups, and solution providers for delivery of international remittances. And posts have digital platforms and physical branch network to aggregate services for other businesses. And as I spoke of the unparalleled physical network with electricity, power, and internet connectivity, as well as extensive geographic coverage, there is scope for system upgrades and adoption of new technologies. And partners in this room and beyond are invited to join hands and work together with the Post in increasing access to financial services in Africa. There are gains to be made for interested partners, as signing up with the Post ensures an immediate availability of service across the country, which is offered uniformly and in a standardized fashion. And finally, this offer is for startups, for money transfer software solution providers, for established old businesses, banks, insurance companies, money transfer organizations, youth and women organizations, MSMEs, all of you can find space within the postal network, which will help to enhance what you are doing. And with that, I would like to thank all of you for your kind attention. Thank you.
Thank you very much, Dr. Sifundo Chief Moyo. A very good speech, and I think the news that the post office is open, is not a closed box, but is very much open for partnerships with money transfer operators, with remittance service providers and payment system providers is good news, I think, in the context of this forum, and especially also in the context of this session. This panel session is about the enabling conditions for financial inclusion, for remittance recipients and senders to increase financial inclusion. And what is the background? The background is that actually for many people, they, as we heard already in the previous sessions, they receive the remittance in Africa and elsewhere, and in many cases they run to get cash. If it's not a cash out remittance, then it's immediately on a wallet, but the value on the wallet is cashed out, or if it is sent to a card, then the money on the card is cashed out. This is a big challenge on both sides on how to increase financial inclusion, how to move from this cash out to more financial products, and to especially say in savings, in loans, insurance, in a whole package of financial services. This would be really financial inclusion rather than receiving it on the wallet and the next day or the next hour to cash out. And that also impacts, if we talk about cost of remittances, this has all a big impact. That's where we have in this panel, I think, very reputable, intelligent practitioners in this field, and really in looking at how the digitalization of remittances can bring change in this area. And first of all, I would like to briefly, a short round for the introduction of the panel members. If I may take actually the first thing, my name is Hans Born, indeed the Managing Director of the Post Finance International Development, based in the Netherlands, but working with about 70 countries worldwide in the field of financial inclusion and looking at partnerships with agency networks, postal networks, payment systems. I would like to give the floor, first of all, if we walk around this, Nana Bayin Coleman, please.
Good afternoon, everyone. My name is Nana Coleman. I lead product development for a company called Flary. And what we do at Flary is we make it possible for immigrants to find and pay for healthcare for their family members back home. The broader vision of Flary is really to support the general financial wellness of migrants wherever they might be. And so we have ambitions and interests beyond healthcare, but it's really looking at, migrants have an obligation in the place where they've come from. How do we make it efficient for them to meet that obligation and then fulfill their, hopes, dreams, whatever they're trying to do beyond that with respect to their financial lives. So really excited to be here with you all this afternoon.
Okay, good afternoon. First of all, thank you very much, Ibad, for inviting us here and giving us this platform. My name is Adi O'Shea. I lead the Africa work of an NGO by the name of Women's World Banking. We focus on bringing more low-income women into formal financial services. By bringing more women in, we're not excluding men, but we recognize that there are unique barriers that women face in being financially included. If you solve those barriers, you solve for men as well. As I said, I lead the work in Africa. Our focus has been Nigeria as a priority market. We're working with financial service providers, banks, fintechs, insurance companies in Nigeria, increasingly in Kenya. We're also trying some different models of approach. If you think of us as consultants with financial inclusion knowledge, we bring into the banks, for instance, that financial inclusion knowledge. One of the different models that we're trying at the moment is, rather than implementing solutions on behalf of those institutions, we're actually teaching those institutions how to think and implement those solutions themselves. This allows us to work with multiple institutions, allows us to work across multiple markets, and in theory, scales our impact. So yeah, there's a project that we're working on at the moment, which is very much to do with using remittances as an onboarding platform for financial inclusion for the receiving end, and I think we'll have an opportunity to talk about that for this afternoon. So great to be here.
Good afternoon. My name is Samuel Tiriongo, the Director of Research at Kenya Bankers Association. Kenya Bankers Association is an umbrella body for all banks in Kenya and some microfinance, deposit-taking microfinance institutions. And our role is really advocacy for bankers to have a conducive working environment, but also in there, we appreciate the fact that even as we talk about the interest of banks, we also talk about promote the interest of the clients that banks serve, because without good clients, then banks won't be in business. So we have financial inclusion programs that we run at the association, and one of them is really targeted at small and micro enterprises. And the idea is to de-risk them. The idea is to promote their formalization so that at the end of the day, they are bankable. We also have programs we coordinate the activities under the ESG, and then of course the social pillar carries in there the financial inclusion component. So we will be sharing more of the activities that we do around that space in the course of our discussions. Thank you.
Hello. Good afternoon, everyone. My name is Amitabh Saxena. I'm the Managing Director and Head of Product for Digital Disruptions. I want to thank IFAD, first of all, for bringing us together. It's great to be in Kenya. Just a brief note about us. We are an end-to-end innovation consultancy that's been operating for about 10 years or so. We exclusively focus on fintech and financial inclusion in emerging markets, a good portion of which has been in Africa, but also in Asia and Latin America. We've been quite privileged to work with a number of public sector and private sector organizations, from MFIs to banks to payment networks to MNOs. And we are very privileged to be working with EcoBank Ghana under the IFAD Prime engagement, which we'll be able to hopefully to talk about a little bit more. So short version, we try to essentially act like a startup within large organizations and really bring that speed and focus and agility to translate a lot of the initiatives into really compelling products and services and customer experiences. Thank you.
Thank you very much for the brief introduction of each of you. It's very useful. If we look at the panel and the discussion, I think we could look at three main questions. One of them is about the future of remittances. As we see, the cost is going, the sending price is going down. The question is, what is the business opportunity of remittances, and what would this help in building a package or a solution for broader financial inclusion? Is that an option? What would need to be changed? The question, therefore, is also, what are the opportunities, or what can be done in bundling or coupling remittances to financial services, to basic financial services? Is it a standalone product, remittances, or can it be a package of financial services? And who is then to initiate this? Is it the sender who would opt for more financial services or needs to have more financial services? Or is it the receiver who needs to look for and to be educated for more financial services? And is there a possibility to access? And what would enable that is data, commercial data, client data, behavior data. Is this essential to bring these bundling to reality? Then I think the third main question is about partnerships. There are RSPs or MTOs, which are specialized in remittances. There are banks, there are insurers, there are microfinance institutions, but if we look at financial inclusion, with whom or what could be the partnerships, or what can be built in partnerships to promote and advance financial inclusion, if it is driven or if the first step is the remittance? I would like to ask each of you to give your view on this, and based on your own experiences in recent project work, what are the key challenges, what are the key lessons learned in this field? So if we may start again with Nana Coleman of Fleury. Yeah, thank you.
Yeah, so I think I'll start with, when we look at the business opportunities with remittances and other financial services, I really kind of think about remittances as a means to an end, rather than as its own, in terms of the future of what's possible, rather than as its own standalone product. And the reason that I'm sort of thinking this way is because of what we've been doing at Flurry for the last 2 years. We know that for the most part, people are sending money to accomplish something back home, whether it's, paying a school fee, whether it's paying for their parents' health care, whether it's, in the unfortunate event you have to bury a relative, right? And so if I'm some sort of financial services institution, I'd really be looking at how do I make remittances a part of my entire sort of vertical in terms of the services that I'm delivering. And in a future where that is a thing, I think you could start to see remittances sort of become commoditized, because you're going to want to get the cost of that down as you try to expand your market and as you try to differentiate in the process of scaling through the diaspora. And so that's really how I would say I tend to think about what the business case is for remittances and how that plays with financial services. I don't know if you want me to go on the rest or...
Thank you. I think it's a good explanation indeed. The view from the sender, I understand, to send remittances, but actually also from the sender initiative to open up financial products and to pay for them at the recipient side. That's, I think, a major change you are promoting in the field, and therefore also promoting financial inclusion and less cost on remittances, because the amount for remittances is less because part of it are flown directly to the other financial products.
Yeah, I mean, I think that's exactly it, Hans. That's really how we look at it. So that'll kind of be, you'll hear that as a theme throughout my comments this afternoon.
And I think the same question also for the colleagues, but maybe you could answer it first. Client data, how do you, or where do you find the client data, or how do you target potential clients? Not every sender has the capacity to send, say, certain amounts. Maybe it's sometimes indeed $100 or $150, in some cases $250, in other cases $350, but to be able to afford from the sending side to pay for, say, insurance premiums or for a short-term loan, that requires also financial capacity, and it requires financial education on the receiving side. So what is your way of addressing these challenges?
Yeah, so in terms of finding our customer base, we're really focused on the sender. And so our goal is really how do we get to groups that serve the diaspora in various host countries. So in the United States, whether that's churches, whether that's various ethnic and cultural associations. And with our first product being healthcare, we're really focused on who does that problem resonate with? Because those are the early adopters of the solutions that we're building. Now, on the recipient side, I think there's a really interesting case for how you use data on the recipient side. So for us doing healthcare work, and this is all, I mean, it's still very messy. A lot of the work we do is very manual, but given the level of interaction that we have with our recipients, who we call beneficiaries at Flurry, we have a lot of information about what their health situation is, what hospitals they go to, what medicines they're taking, these types of things. And so I think for us, starting in a very specific lane with healthcare, there's really an opportunity to start to say, okay, what are we seeing? What themes are emerging? What does this mean for the types of services we need to be able to roll out next? But I think the other piece that's interesting to us as well is what are senders saying to us that they need? For example, we've had a lot of senders talk to us about life insurance. They know that in the event that a relative passes away, there's some obligation they're going to have for supporting that expense. And so that's a conversation that we've been having with a few life insurers in the markets that we're in. And we've got some life insurance riders attached to some of the solutions that we offer in our marketplace now. But a lot of it is really focused on what are senders saying that they need. I think when I reflect on a lot of the conversations here, it's been a lot about what's happening in the recipient countries. But I think given that the flows are coming from the diaspora, there's a good case to be made for really deeply understanding the needs of those folks living in the diaspora.
Excellent, thank you. This is giving a fresh view on new opportunities. Ade, with Women's World Banking, what are your views on, say, first of all, the business of remittances and the viability, as it might be more and more commoditized, lower price, low revenue flow of business, and how to bundle, how to package this into a broader, say, business for financial services, promoting financial inclusion. What are your views and experiences in recent projects in knowing the recipient client, in assessing the remittance flow as part of the profile of the client? Could you share a few of these things?
Yeah, absolutely. So if I talk specifically about a project that we have underway in Nigeria, where we're looking at remittances as an onboarding tool for financial inclusion of the receiving, so at the receiving end, not so much on the sending end, but much more on the receiving end. I think what we've seen generally in our business and in the work we do every day, that digitalization and specifically increasing access to mobile technology, increasing access to data, the financial service providers that we work with, the banks specifically, are more interested today in consumers that they were not interested in 10 years ago. So that's kind of changing the game. These financial service providers recognize that the business case, the opportunity is how do they appropriately and properly serve those consumers who they couldn't reach before. You know, these consumers now have a mobile phone in their pocket. That's a channel that they can be accessed through. And in Nigeria, in our project in Nigeria, we're looking at how do we use the remittances that are being sent back to Nigeria, usually in dollar form, where regulations require consumers to go into a bank branch to access those dollars. There's no sending that money into a wallet. There's none of those sorts of things. So how do we use that as a onboarding platform? You know, one thing that was quite interesting is that historically that has been a very transactional relationship. A consumer would come in, they get notification that they had a remittance to go and cash out from the bank. They would go into the bank, take that and leave. And the bank would have no idea beyond what was on the slip, who that consumer was, what their needs were, what they were going to do with their money, you know, how could they properly serve that consumer. So in order to build the business case, the first thing they need to do is understand the consumer who is coming in and taking that cash, and then understand what are they using that for, and then sort of rope that into their normal processes. You talked about bundling, or you asked the questions about bundling. Banks cannot survive unless they bundle. That's just how the business works. But if you don't know the consumer, how do you know how to bundle? If you do know the consumer, these banks have very, very, very intelligent product managers who spend their entire lives figuring out how to serve consumers. But you can't do that. You can't even get into that process unless you know the consumer. Once you do start to understand the consumer, once you do start to understand what their particular needs are, starting with what was that remittance for, then they've got processes already which they can incorporate, which they can run solutions, which they can really figure out how else could I serve this consumer, what else could I provide, and how else do they become viable to me as a customer. So the business case really starts with understanding the consumer and then bringing that understanding into the business that they've built over the years to really figure out how to properly serve this consumer. You have to connect with the consumer in multiple touch points for that consumer to be viable to you as a bank, for instance. And you know, we're learning this in Nigeria. We're learning ways of understanding how to you know, get the information from the consumer, how to figure out what's the process, what are the steps to take to really build your understanding, and then figure out how to serve that consumer. And the way we work as an institution, Women's World Banking, is we incubate these solutions, and once we've taken those learnings around the solutions, we replicate those solutions with other financial service providers. So I think, I can see our business depends on really finding ways to take those learnings and roll those learnings out through other financial service providers. So I can really see that happening.
Thank you. I think a very interesting view and a very relevant experience, especially in Nigeria, on indeed collecting and assessing data to expand towards other financial services, and how to communicate and how to work with potential clients to educate them and to broaden this range. I think a very relevant experience. If we may ask then Dr. Samuel Tiriongo from Kenya. We have already heard a lot about Kenyan banking sector, financial inclusion, remittances, but I think you are as a researcher and policy specialist at the Kenyan Banking Association, I think you are on the top of the mountain of these data and information and elaborating on it. Maybe you could share some of your views and experiences on what is the situation in Kenya, in your view, on expanding or utilizing the remittances as a trigger for financial inclusion. Can it be used? Are the data adequate? And can it be digitally used, or do you need to have face-to-face communications? Product packages offered by Kenyan banks? Is there a collective approach in this? I think a lot of questions which would be interesting to hear from your background and your experience at the Kenyan Banking Association.
Thank you, Hans. And I think you mentioned that, so I'll start off from a research standpoint. And from research done in 2018 on the relationship between remittances and financial development in Kenya, very interesting findings came out. The issue of remittances showing some propensity to support growth in bank accounts, growth in savings, as well as also the uptake of digital products, and particularly the mobile banking products. And from this research, the issue of the digitization also pushing down the cost of remittances came out quite strongly. So, and I think we cannot emphasize the issue of the digitization within banking sector, particularly leveraging on the mobile banking and mobile money technology that has been in the country now more than 14 years old. And definitely the concern would then be in terms of, not really a concern, but the development would then be, what were the initial conditions for remittances to pick up in the country? And I think it became very easy then for banks to look at the opportunities within the remittance space. There was a study also that was done by Central Bank and looking at what are the key sectors that are absorbing the remittances. And it so came out, the real estate, households in terms of supporting consumption as well as healthcare. So if you look at some of these areas that are being supported by remittances, they're actually very core, and they even form the development agenda of the government. So for banks, it was just the issue of aligning themselves in terms of what are products that can be provided to support the remittances, while at the same time also onboarding the recipients of these remittances to start accessing other services within the banking sector. So two banks have come out quite strongly, and I won't shy away in mentioning KCB and Equity Bank was actually out there, like 4 years ago, out doing roadshows in Europe and in the US to really sensitize the diaspora that we have an opportunity to send back most of the money. That actually kicked up remittances by about 30%. But what was the value proposition that was given to the customers? You have a chance not only to send money, but also to have the money banked within Kenya, so that the recipients on the other end can also develop the appetite to use other services that then the bank is able to leverage on for purposes of extending even loans to customers. So the idea was not just to use it as a cash out, just like it was mentioned, but is actually to bank the unbanked within the recipients of these facilities. And if you look at it, actually, what remittances would do, it speaks directly to the 4 C's of credit. If you look at it, so you would be talking about collateral, you would be talking about cash flows, you would be talking about the conditions for lending and building the character for the recipients, which are very core in credit scoring at the end of the day. So ideally, once the recipients had received the money in the banks, they were encouraged by banks not to withdraw the entirety of it, but build a deposit base, because on the basis of the same, they can actually demonstrate over time the cash flows that they have built, and therefore be able to build on their scores and access credit as a result of that. So this has become central for banks, and we have actually seen that one other condition that has helped in terms of building the bankability of the recipients of the remittances is the issue of the presence of banks, because you find that Equity percent controls about close to half of the deposit accounts in the country. And again, their presence in the last mile destinations would actually be a very good precondition that enables them to actually scale up the uptake of these remittance products that they had created. The other fact that I wanted to emphasize is the role of these remittances in contributing, in supplementing the already financial intermediation processes that continue. For instance, you're talking about $4 billion coming into the country every year. So that will leave the part of contributing to FX earnings, but also on the part of loanable funds. Now that these remittances, not the entirety of it is cashed out, so definitely it contributes into the loanable funds that banks would have to extend their credit. So you're looking at $4 billion, that's about 16% of the private sector loan book in Kenya, because you're looking at 3.3 trillion shillings loan book in the banking sector. So ideally, the banking sector has received the remittances as a potential business case, and there is definitely a lot of interest in the banking sector. A lot of banks are developing products, leveraging again on the digital technology. But amidst all this is the interest to have all players within the remittance space, all players within the digitization space have a role and play a role that is consistent. So to say, is the fact that the regulatory space for digital payments in Kenya is not only regulated by the central bank. You would have the communication authority in place, and just when the industry was geared up to roll out more digital products that also include the remittance products, came in the data protection laws, some of them, of course, enhancing the privacy of data, but at the same time, highlighting the need for data to be kept in a certain way, data to be processed in a certain way, but most importantly is the ability of banks to process data credibly. And in doing that, that reinforces the credit scoring mechanisms within the banking sector. That reinforces the ability of banks to use information not only coming from the local banks, the local customers, but also the offshore customers. The concerns within that space, definitely, now that we are a lobbyist organization, we definitely would speak about the challenges in the regulatory space, is the issue of data sharing, cross-border data sharing, because you find that there are no mechanisms for doing cross-border credit scores. There are no mechanisms for doing cross-border customer sharing of customer information, and that affects to a great extent for countries that are very strong on AML, CFT regulations, such as Kenya, because you find that since by their very nature, the we say that remittances don't have a quid pro quo, so there's no economic activity backing the remittance. And because of that, then the explanations around the remittances, particularly for the recipients of large amounts of remittances, becomes a challenge. And that continues to constrain the extent to which banks are able to be used as remitting channels because of their insistence on AML and CFT conditionalities. I think I'll stop it at that for now.
Thanks. I think very good to share these experiences and also to highlight, yes, there is a need for more data to be used commercially to be able to understand the client, to understand the profile of the client, but also the regulatory challenge that there is data protection, privacy to be protected of consumers, and that is not a free thing, the data. So this is a matter of challenges, or in what way or how to collect or how to assess data of remittance senders, remittance recipients, and clients of a specific financial institution to expand the package of financial services. I think that's one of the main points I think you highlighted actually, plus all the initiatives which are going on in Kenya to expand and also in cross-border business with other ones. Thank you. It's a very good overview given and very good to know. I would like to ask Amitabh, as you represent digital disruptions, and we have heard a number of things, a number of ongoing processes, challenges, and one thing is clear: disruption is a must. And maybe you can explain us more about what are you doing, and especially what is the specific experience in Africa in this field?
Great, thanks. Thanks, Han. So I'll go over some of your questions, and I'll give maybe just a quick overview of what we're doing with EcoBank Ghana. If you want more information, I think there's some leaflets outside, and I encourage you to come to the 4 o'clock presentation where my colleague Jacob is going to be speaking more about it. But very, very quickly, the corridors that we're focusing on are Netherlands and Germany to Ghana. And EcoBank has a smartphone app called Rapid Transfer International on the sending side, and on the receiving side, we're looking to link that with savings accounts and build up savings. And we're taking a very holistic business model approach, so we're looking at doing marketing campaigns and offering different sort of promotions and enhancing the UI on the sending side, as well as obviously developing this micro savings account from a product perspective, doing things like agent training, financial literacy, so on and so forth. So in terms of just some of the questions you raised in terms of the business case opportunities, I think it's a great time to have this panel. We just wrapped up our discovery phase, our research and discovery phase, and we're starting design sprints this week actually. So we're thinking a lot about how to translate some of these insights into obviously compelling products and customer experiences. So I think there's 4 that we're particularly keeping an eye on, but this is a more general statement, not only limited to the work that we're doing with EcoBank. I think one of them is pricing models. So I think I think a couple of speakers have discussed different freemium models, but there have been a couple of successful models. I think Remitly is probably one that comes about. So we're looking at different types of pricing models. I think product models such as cross-subsidization and cross-sell models is something that is particularly interesting, just because not all segments are going to be profitable. The third one is technology models, so that's whether that's things like different standards coming about, like ISO standards, or even long-term, or it seems long-term, but it might come up sooner than we think, things like central bank digital currencies, which might be only 3 to 5 years ahead. And then partnership models, right? So I think there's different partners that are being able to address certain aspects of the remittance value chain, so it could be things like fraud reduction or things like KYC. I think in the bundling questions you had, Hans, I think there's 2 things. I think one is I agree with all the other speakers here, I think it's an absolute must for the overall economics to work out, especially for those that have low ticket sizes, and especially for those that are less frequent senders. So I think it is a little bit tricky if you're a standalone business because you just need a massive amount of volume or you just need a lot of value. And that can be a little bit challenging, particularly if you're really focused on some of the lower income and you're not grabbing some of those big ticket sizes. So if you do have the luxury of being a larger institution, or if you have different lines of business, such as a bank, such as a mobile operator, then I think I think there's a lot of different things that you can do, because you can play around with even having money transfer as a loss leader, because you can grab the data and then you can perhaps cross-sell other products. And that brings to the second part, which is there's a tremendous amount of data sources. One of the things that we've been looking at is really how to bring all those different data sources so you can have a real true portrait of the customer. So really thinking of, there's data from the UX, from different digital channels, there's from the customer center, there is obviously KYC data, there's different sort of, product data, there's whole things that we can do. My experience is just not, across working with a number of different institutions, that there's still a lot of money being left on the table. I like to say there's a lot of impact being left on the table because it's not always being mined, in the most optimal way. So I think there's huge opportunities to look at it from that perspective. And then in terms of what to do with the data, I think the obvious ones are things like targeting, better marketing targeting, and underwriting for things like insurance and credit products. But even things like, collections, even things like how do you have a more optimal contact center? How do you do cross-sell? How do you do upsell? There's mounds of things I think that we can do if we just basically get the data architecture right. And the last thing I'll just say on partnerships is, of course, we think very, very carefully about partnerships. Maybe the obvious one is when you do add a partner in the value chain, it normally comes with a cost. It's another mouth to feed. So I think we need to think very carefully in terms of, how much more efficient is that if you do work with another partner versus obviously doing it yourself. And obviously there's a question of, there's a bit of a loss of control when you work with other partners. I think that's one. The other one is partners that are maybe not necessarily in the value chain, but they are doing some sort of either on the first mile or on the last mile. Then I think it's also even more interesting because if you work with a first mile or last mile player, then there could be some direct revenue, but there could be some indirect revenue, right? So the obvious one is if you're working with an agent and they have an existing line of business, there might be a play of saying, well, we can actually help you get more footfall, and therefore you don't necessarily need to pay them an arm and a leg. I will say maybe the one thing that we've seen a lot with partners over many, many years, and one of our big engagements was actually at the end advising not to do a partnership with a very well-known institution is these are what's called type 1. If you follow Jeff Bezos from Amazon, type 1 decisions are very highly irreversible. So we've seen a number of initiatives where a partnership is signed. It looks great on paper. These are very, very difficult to unravel. Maybe a lot of people have the wounds here. So what we always say is that there are some things that we can really test and learn and iterate. We do that all the time, of course, as an innovation consultancy. With partnerships, we really want to make sure you get that right before you sign on the dotted line. So that's the only kind of maybe words of caution that I would offer. Thank you.
Thank you very much, Amitabh. This is a very interesting experience, as you said, about, on the one hand, the data and the working with data, collection of data, data modeling, but also the issue of the partnerships, what's in it, the partnership. It's a challenge, in fact, to be very selective in building win-win partnerships, and therefore also to take a look in what are the costs, the hidden cost of building a partnership, and what is the corporate culture issue with partnerships, which is sometimes or very often not explicit, but is sometimes also compared as building a marriage. It's not one night and signing something, but it takes time to build a truly working partnership. I think it's very good to share that experience and to highlight it. This is partnerships, yes, easily said, but to do it takes time, takes an effort, it means a real investment. And thank you for this. I think we have really heard very interesting experiences and views on the different ways of building and progressing in an enabling, to promote an enabling environment for financial inclusion, and also the challenges which you meet and which you try to address in this. I think the key, to summarize a bit of the key observations of the different experiences, is that, again, data, information is very critical in the enabling environment. These are not the data for the regulator. It is much more client market research, client profiles, data mining, building a different way of know your client, not for regulatory perspective compliance, but for commercial perspective. What would the client need more? What could the client be sold, or what could a family be using as an additional financial service? That requires a very different approach to of the financial institutions to build that, and it's indeed the challenge in how to digitize this. It's about not over the counter and a teller talking and papers, but the basics is, as we heard it from all, actually 5 of you, is how to digitize, how to collect, how to build digital databases, and therefore that's the main, especially the point mentioned by Samuel. We need to take care of data protection, of privacy. You cannot, one financial institution, one bank cannot exchange certain data with another one, but you can exchange data, say commercial data, who is living in which street or which address, certain personal data can be collected, subscription data. There are a lot in worldwide, these experiences exist in using also social media or internet. This requires a very different approach than the more or less traditional banking approach of compliance with regulatory data provision. It is a way of getting better understanding of what are the clients, what's the profile, and what could be the ideal package for that family. And therefore also what to design for, say, migrant families, what they would need as a package and how to educate them, or how to combine that with the sender, who could also do more. And as we heard from Fleury, a very good example of arranging for insurance, a different type of insurance, but indeed it requires understanding of who is the migrant and what is the migrant family. So this is a high requirement on, indeed, customer intelligence, market intelligence, profile building, data mining to be more effective. This is a very critical issue. The other one is indeed in the design of the products and the design of product packages, which is not as standard as, say, for any family or in any age group. There will be in most of the, especially retail banks, consumer banks, insurance companies, they will have their segmentation in different income groups and different age groups, but this is also a segmentation, a special segment for migrant and migrant families. And we could say the segment is sufficiently big with 1 billion migrant and migrant family members around the world. This is huge, but not, I have often not really identified in marketing strategies of consumer-focused, mass consumer-focused banks or financial institutions and microfinance institutions, etc. So this is another challenge to be addressed along the road. The issue we also heard here is about partnerships. You mentioned it as an issue for Fleury. I think Amitabh also highlighted it in the case of Ghana. I think it's a very relevant thing. You cannot do everything on your own. There may be there are good opportunities and good rationale for building partnerships, but building partnerships is a strategic choice in itself and requires really an investment in building that partnership. So that is a major issue in going forward in building the enabling environment. I think these are maybe the three main conclusions, joint conclusions. I think we had really very interesting thing. And someone wants one final comment.
One final comment, and in the space of building partnerships, and of course, I talked about the success story of one of our banks, and that has not been entirely the success of that bank in its own initiative, but also the partnership that they have built with payment service providers within the first mile. And the reason why I'm bringing this point up is the issue of what is the role of the regulator within the establishments of the partnerships. Yeah, because without the nod of the regulator, it becomes a challenge to be able to continue with partnerships, especially with offshore entities. So it becomes very important when the regulator has the goodwill to do due diligence for entities that are outside the country, or collaborate with counterparty regulators for purposes of ensuring that deals are struck and that business opens up for the banking sector and any other entity that is doing remittances.
Thank you. Thank you for highlighting DT challenges in building partnerships. It has also to do with the regulatory framework, indeed, and with additional risks which need to be adequately assessed. It means, therefore, don't expect partnerships to be established within a day or a month. It takes really careful and proper preparation. Thank you again. I thank you all for the participation in this panel and for your valuable contributions. I would like then to conclude this panel discussion, and we have the picture at the end. Thank you.
Thank you.
Thank you, Hans, and thank you so much, panelists, for this panel. And as we take the group photo, I will call upon the next panel, the moderators and speakers from moderators. This panel will be moderated by Semfri, Masiwa Wusare, Integrity Team Lead at Semfri. We will have also Amal Money Express, EcoBank Uganda, Financial Intelligence Center of Ghana, South African Reserve Bank. So I will kindly ask you already to be prepared to join on the stage right after the photo. And I'll take the opportunity also to make an announcement. The session will run for 45 minutes. We'll have only 15 minutes for the coffee. A coffee break that will end at 4. And the reason I emphasize this is that at 4 o'clock, this room will also divide equally, as we say. So the remittance tract will be divided into digitalizing international remittances, Morocco and Senegal practical cases. This will be in this room. It will start at 4 o'clock, and it has translation. So, and we don't have the translators more than for the hour assigned. So we will start really on time. So if you hear the little bell, please, if you're interested, come. The next one in parallel about Ghana and Uganda, linking financial services to remittances, will be in conference room 3, next to across the hall, next to number 2. So next to that one is conference room 3. In the program you have is at 9, conference room 9, it is conference room 3. So, and just to say, there is a cocktail, again, as I mentioned this morning, that will be occurring in the premises, in the marketplace downstairs, but we'll make the announcements as we get. So, without further ado, I don't know if we are missing someone.
We're just waiting for Raymond, one panelist.
Okay. We're waiting for one panelist.
Can I go in? Huh? I didn't see my name.
Your name?
It's not.
No, it doesn't matter. You can just sit here. Thank you, Pedro. Good afternoon, everybody. We're still missing one of our panelists who will be joining shortly. My name is Masiwa Rusare. I'm with Senfree. It's a pleasure meeting all of you to discuss these important issues. From the morning sessions, different speakers were highlighting the importance of KYC and CDD issues as key access barriers for remittance access for low-income and rural households. And I think this session that's the Hello KYC session that Pedro mentioned earlier on. And then also it's Hello Regulators. We have some regulators here. So it's really a pleasure. Just to give an overview of why simplified due diligence and alternative identity is important. In a number of countries, there are still citizens that either have limited ways of identifying themselves or actually don't have identities at all. Now, it's important to ensure that we don't leave this behind. It's important to ensure that these are well served in terms of financial services. But also, this is the FATF framework, Financial Action Task Force framework, and the risk-based approach that it emphasizes also flags the importance of simplified due diligence and alternative identity. Actually, if you look at recommendation 10, that deals with customer due diligence, it does emphasize or it requires institutions to identify and verify customer identity using reliable, independent source documents, data, or information. That's provided for within the FATF framework. But what this means, this has meant different things to different institutions, to different regulators. We have had situations where those people without proof of identity or are unable to prove where they who they are or where they stay haven't been able to access financial services. So given that context, in 2020, FATF also followed up with some guidance in terms of digital identity. We all know the role of technology in terms of enabling identity for customers and financial services. In that document, it emphasizes the importance of alternative identity in identity proofing, that is to ensure that you can prove that the customer is he or who she says she is. It also emphasized the importance of different levels of assurance for the different identity systems. And also, more importantly, it does emphasize that the levels of assurance should be linked to the risk that is posed by the customers. So this is where the simplified due diligence, alternative identity issues come from. Now, how this is landing at the country level or at the different institution level still remains a challenge. And this is the issue that we are going to be discussing in this panel. We are going to be looking at what are the opportunities that are available from the regulator's perspective as well as from the remittance service provider's perspective in terms of innovating and allowing innovations on this issue. So I'll just quickly introduce my panel. From my far left there is Dr. Raymond Shazi. He is the manager in the Prudential Department for the South Africa Reserve Bank. He has also been involved a lot in the risk-based approach work and some work also at the regional level with Esamalag. Welcome. The next is Seth Amoko. He is a compliance manager with Financial Intelligence Center in Ghana. Seth has been involved in training on AML safety for regulators as well as financial service providers. He has also been involved in mutual evaluations under the GIABA regional grouping, which is the West African Anti-Money Laundering Group. Welcome, Seth. Next is Moses Bandurachi. Moses is the relationship officer in charge of remittance for EcoBank Uganda. He has also been involved in compliance issues. Then last but not least is Mariam Adan Osman. Mariam is the compliance manager for Amal Money Express, based here in Kenya. She is also on the board of Kenya Remittance Association. Welcome. Yeah, so I'll start with you, Raymond, in terms of the topic under discussion. What has been your experience within the South Africa context, or broadly within the regional context, in terms of the opportunities and challenges that as regulators you have been able to provide regarding simplified due diligence and alternative identity? What has been working and what hasn't been working?
Oh, thank you, Monsieur, and good afternoon. I think the most important thing in this matter is that the change cannot be left to the private sector exclusively. We need everyone's input to lead and to drive change. More importantly, the regulators, the public, the private sector, pulling together to ensure that we drive change. A few years ago, as the South African Reserve Bank, we received a license application from one of the entities that said they wanted to onboard clients using facial recognition, iris reading, and fingerprints reading. That was groundbreaking, which means we are starting to break the ground in terms of new identification. So change cannot be left to the private sector, the regulators, the government, the policymakers, the government. Everyone needs to be in the forefront in ensuring that we support and drive change so that we have the developing economies and new ways of identifying clients so that we can onboard more clients, particularly the low-risk clients, to ensure financial inclusion. So that's the points that I've seen that they work. If we're going to drive change and step into new identification of clients and the development of our economies, we need to pull together as regulators, the government, public, private sector, the banking sector, insurance sector, everyone, to make sure that we drive change and we pull together to ensure that we have successful economies. Thank you.
Thank you very much, Raymond. Change, you've emphasized the importance of change being an all-stakeholder endeavor. I think that's really quite important. Turning to Mariam, now, jurisdictions do differ in terms of what their regulatory frameworks allow in terms of innovation. But I think the key thing is that innovating for financial inclusion is important and is recognized by the regulators and other development frameworks. Now, given your case, the case of Amal, what are some of the innovations that you have been undertaking regarding simplified due diligence, alternative IDs, to be able to better serve low-income and rural households?
Good afternoon, everybody. Allow me to talk about Amal. Amal Express pioneered the idea of moving money around the world and has been connecting people globally for over 25 years. As one of the world's leading providers of cross-border business payments, Amal Express is transforming how business can expand globally through one of the largest and most diverse payment networks in the world. We are a leader in global payment service, from small business and global corporations to families near and far away to NGOs in the most remote communities on earth. Amal helps people and businesses move money to help grow economies and realize a better world. We continue to innovate, develop new ways to send money through digital, mobile, and retail channels with a selection of convenient payout options to meet businesses and consumers. So I go back to the question. In terms of innovations, we have come up with digital onboarding processes that are still awaiting approval from the regulators. The challenge is basically regulators taking too long to give approval due to the customer due diligence procedures that they require us to have for our customers. And we also have challenges in terms of customers wanting to adopt this digital payment modes because they're looking at the cost of exchange when transferring the funds through mobile wallet, and also looking at the transfer costs when they want to now transfer the funds or maybe withdraw the funds. So there's a cost on that. That is the challenge we have in terms of moving digitally. Allow me to thank Senfree and IFAD for allowing us to be here and being part of the Remittance Access Initiative that was highly beneficial for us. We greatly enhanced the access among low-income and rural households, and we look forward to collaborate more with Senfree and IFAD on remittance and remittance-related work. Amongst others, we were able to achieve risk assessment capacity building. This was through a lot of trainings that were given to us by Senfree on using integrated risk assessment framework that unraveled the various risks that now has helped us reduce the risk ratings of some of our customers that were receiving a small amount of money from a high-risk jurisdiction. So the reduction of the collection of documentation has now increased our I would say the customer volumes to a good number. I'd also like to thank them for enabling us to leverage with one of our partners who is providing, who is terminating on our behalf through mobile, to provide due diligence documents whenever required, because that was a challenge with the regulator. And so we had to get the regulator accept us to rely on the third party, and then now the third party to give us access to documentation whenever required. I think I'll stop there.
Thank you very much, Mariam, for that. And you are emphasizing the importance of working with the regulator in terms of these innovations, but also understanding the risk that is posed by these low-income and rural households. And I think the earlier session emphasized or discussed, the issue of risk. What risk are you mitigating when you implement some of these processes? Now, turning to Moses, in the context of Uganda, EcoBank Uganda, what are some of the innovations that you have put in place, and what has been working and what hasn't been working?
Thank you, Masiwa. My fellow panelists, ladies and gentlemen, good afternoon. Great opportunity. Thank you to IFAD. I'll go direct to the question. So, EcoBank Uganda, I got a chance to actually be a project manager of one of the key initiatives in the remittances space as someone who is directly in charge of remittances for the affiliate or for the bank. So one of them was, of course, identify the challenges, and here we are talking about KYC. if these people, if remittance recipients come to your branches, if they come to your locations, how are they going to access money? And what challenges do we have specifically around KYC? We found out that today someone has come with an ID, but tomorrow maybe they have forgotten, and by default they're going to assume that you have a copy of their ID because you have served them before, which is not always the case. Why? We don't have a copy of this person, or if we do, we have it in physical form. And if I'm going to retrieve it as a frontline person, I am going to go through a pile of thousands of transactions, which is time consuming. So the first solution that we developed is called an ID database, a digital ID database, whereby we collect information, minimal KYC from this customer, and then we store a digital copy of this recipient in a system that was developed in-house, so that when you return the next time, we actually retrieve a copy from the system. What does this solve? Ultimately, even when you have actually lost your ID, there are scenarios when maybe your bag was snatched off you, you no longer have an ID. Maybe an ID was in that bag. So that risk is mitigated. You're going to come the next time. Since we already have a copy of this ID, we can go ahead and serve you on a remittance. Then two, we are also seeing that people forget IDs. Not even forgetting the actual, let's say, national ID or a passport, they also do not know what kinds of IDs they should present. And of course, in different jurisdictions, there are different accepted forms of IDs. So today, if you've come with a driving license and it is not allowed, or we cannot serve you using that driver's license, we shall say, instead of turning you down, we are going to use the original ID that you had provided before, and we go ahead and serve you. Then it also simplifies our communication, since these are actually not directly our customers. They are just simple walk-ins, but maybe there are promotional activities that we want to run with them in the future, but we do not have the information digitally or stored in a soft form. So using this system, we can retrieve their information and maybe walk in the frequent customers. Remittances have a character of, I am going to send money to you every month. We have seen this trend. Since these are migrant workers mostly, they have to send back money at least every month or twice a month. So if something has happened to this customer, maybe they've not come to you in 2 months, in 3 months, using this system, we can go ahead and do further engagements. I mean, I can go on and on. The system is live, we have piloted, and we have seen enormous contributions, and of course, the positive feedback from our customers. Then the last but not least is the system generated receipt. So if we talk about rural households or low-income earners, the basic characteristic we are going to see is that these people are mostly illiterate. I'm not saying all of them are, but most of them. If someone cannot read and write, you're not going to make them write or fill a form when they are receiving a remittance. So there's been a risk of maybe contracting a third party, or they are going to speak to a security guard, or they are going to speak to a staff to help them fill a form, which has exposed mostly the information about the remittances, and then there's been a risk of maybe it has been tampered with, or it has been imposted, someone has imposted and tried to withdraw this remittance. So we are saying, we eliminate this form, we provide different solutions, come straight with your reference number to the tills and get served in an improved turnaround time experience. I think I'm going to stop here. I don't want to spend. Thank you so much, Masiwa.
Yeah, thank you very much, Moses, for sharing that. Now going to Seth, what are some of those opportunities within the Ghana context in terms of your regulated framework in enabling simplified due diligence and alternative identity.
All right, thank you very much. And thanks for the opportunity as well. So I will speak as a regulator in the area of anti-money laundering and also as ECOWAS country assessor. As a regulator in terms of opportunities, it is expected that the banks and the non-banks should be able to put in place the measures to make sure that they engage in simplified due diligence. Now I just want to connect to FATF recommendation 1 and also recommendation 10 and 14, talking about risk-based approach. So as a financial institution, if you want to engage in SDD, what are the risks that you've identified? What are the controls? What kind of services are you providing to warrant SDD? Now, in the context of remittance, as a country assessor, you notice that remittance transactions may not warrant SDD. It will go beyond that, meaning you may have to do normal KYC CDD, or even you go extra enhanced due diligence. So from my point as a regulator, in terms of opportunities, we are looking at the reporting entities or the financial institutions to conduct their institutional risk assessment, identify what they are exposed to, and also put in place the controls to be in line with the international standards. As we may also know, when it comes to financial inclusion, even the FATF standards promote financial inclusion. The World Bank too, that's almost all countries we use in West Africa, also promotes financial inclusion. So there's a component on financial inclusion. So that tells you that we support financial inclusion. However, we want to make sure that the weaknesses or the issues concerning AML/CFT are addressed within the National Risk Assessment Framework or within the Institutional Risk Assessment Framework. So, thank you.
Thank you very much, Seth. And just to follow up on that, and as an assessor and somebody who has been involved in the mutual evaluations, now what would you say, what would your advice be to either a regulator or an institution that is hesitant to innovate on these issues on the pretext that either this impacts grey listing or this actually leads to unfavorable mutual evaluation outcomes?
Sure. All right, thank you very much. Once again, to connect it to the Financial Action Task Force, as a regulator, we also want to promote financial inclusion agenda. So we want to make sure that in promoting financial inclusion agenda, we also do not, compromise on AML/CFT. If you look at some of the write-up from Financial Action Task Force, even World Bank and other stakeholders like RUSI, there's the need for us to promote financial inclusion. So then there should be innovative ideas, maybe in terms of simplified CDD, the need to get information from the clients. Once again, I'm talking as a regulator. So the banks and the non-banks are supposed to know more about their customers, so then they can gather basic information, maybe to do with fingerprints, to do with address confirmation, which may be stored in the system. So in the case of not having physical ID card, this information can be used to, assist the customer. As I said, the AML/CFT concept is not to disengage those who are not in the mainstream banking. If you look at some of the FATF guidance notes, even on unintended consequences, these are produced to make sure that at least we all promote financial inclusion. So as a regulator, we will encourage innovative ideas. We will make sure that the financial institutions conduct their risk assessment, come up with other forms of ID in terms of customer due diligence. In the context of Ghana, as we speak, we are promoting the Ghana card usage. So maybe in terms of financial inclusion, some of the institutions may have some challenges, but in the long run, I think it may help with CDD measures. So if you walk to any of the commercial banks in Ghana, be it EcoBank or Stanbic Bank, the key ID that will be required of you is the Ghana card. So we want to do that to make sure that we know more about clients, we can have the assistant, we can have their information already stored in a database, so then we can do genuine business with them. Thank you.
Thank you very much for that perspective. And just turning to you, Raymond, what kind of advice would you give on the same issue?
What was the question?
Yeah.
No, thank you, Mosewa. I think we all are aware that there are countries that were grey listed and fought hard to get out of the grey list. If you take the case of Mauritius, for example, they were only grey listed for a year. But that takes a lot of work. It means a proper strategy, a good coordination at the national level, the political will, and reaching to the right people. For grey listing, if you are positive, you are closer to white than you are closer to black. So that means you've got a chance to succeed and get out of the grey list if you contact the right people, you have the right strategy, and you know where to get help. I think the challenge with other countries that would be grey listed or get grey listed is the lack of proper coordination at the national level that they will have or face. It's important to have the national coordination, the political will, and reaching to the right people to get help. In this region, if you want to know where to get technical assistance, you know the FATF-style regional body, the SMLAC, or any FATF-style regional body where you can reach out to the secretariat and they can assist you, guide you to the right channels and the right people that can give you assistance. We've learned from various countries that it is possible to get out of the grey list much quicker and with a long-term success in terms of developing your MLTF controls in the long term without really regressing back to the grey list with the future mutual evaluations. If you have the right strategy at the national level and the right approach in dealing with the deficiencies, you are likely to win and get out of the grey list much quicker. I think it is very important to emphasize the issue of political will. You find that countries are grey listed, but the technical experts are on their own in terms of dealing with issues and deficiencies. If we do not escalate our issues to the right level of responsibility, the parliaments, the national committees, the high structures, we stand a chance of losing or the chance of failing in terms of tackling the issues that were identified by the mutual evaluation. So that's very important to know where the authority is and to know who are the right people to drive the development and the remediation of deficiencies that were pointed by the mutual evaluation. I think I cannot ignore the issue of knowing where to get the right help at the right time. When you are grey listed, there are opportunities, technical assistance, but know where to get help. If you think you will focus on getting assistance only at the national level by national coordination, by internal structures and organization, you stand a chance to lose. It's important to reach out to the right people and know where to get help that will drive change in your remedial efforts so that you drive the remedial process much quicker and achieve success efficiently. So I think that's very important, but we cannot ignore the issue of the political will, so that you get the control at the right level, the funding, and every support that you need. Lacking in political will means you are failing everywhere, because you will be driving change as the technical experts without the right support and the right authority at the top, which becomes a challenge in driving change, because you will have the slow pace and you will be frustrated by the lack of budget, lack of technical support nationally, and lack of proper strategy at the right level. So if you will get out of the gray list much quicker and succeed to have the long-term and lasting impact of the remediation work that you've done, you need to know where to get help, you need to have the right strategy, you need to have proper coordination at the right level, you need to reach out to the right people who will give you support. We've got the Secretariat, FATF style regional bodies. They know the right help for the right problem. So it's important to reach out and know where to go if you have challenges. So I think that's the approach. We've seen that you can be on the gray list and get out much quicker. But you can also be on the gray list and remain there for the very long time if you don't have the right support and the right authority to drive change. That's very important. We spoke about political will. So it's important to know who drives the processes and the right people, the right coordination at the right level. You will get out of the gray list quicker if you know what to do and you have the right strategy. Thank you, Monsieur.
Thank you very much for that, and then for just emphasizing the issue of political will, and also that gray listing is not the end of the world. You can still innovate and be able to serve the low-income and rural customers that really require financial services. Okay, I'll stop here. I can at least, I can go on in terms of asking questions to the panelists, but I'll stop here and just open the floor for questions from the audience or anyone wanting to share any specific innovation in their jurisdiction or context that has allowed them to better serve low-income and rural households. I'll just start by taking one from this side, one here, one there. Okay, the middle, you are ready. At the back.
Thank you. Michelle from Standard Bank. My question is for the regulators, including my own, so I'm asking this at my own risk. So the last conversation we just had was about financial inclusion. And I like that conversation because we do have the reality of undocumented migrants in countries like South Africa that have a large migrant population. Then here we're talking about ID. So in South Africa, you can't, as a bank like Standard Bank, bank an undocumented migrant. So I just want to understand then from a regulatory perspective, how are we thinking about financial inclusion for undocumented migrants? Because the fact that we can't bank them is actually excluding them even more. But I do understand, the intent of the regulation. How do you balance those two things?
Okay, we'll take the questions and then ask the panelists to address at once. Okay. Anything from this other side? Okay, Louis.
Thank you, Masiwa. The World Bank did a study about 18 months ago, Kuntai Chelik, looking at the extent to which countries have actually used the leeway allowed by FATF to implement simplified due diligence and exemptions, the low-risk exemption. And the finding was that the European countries and the G20 members are far more are far greater users of that space than developing countries. And I just want to put that forward because I think that links with what Raymond has said. We need the political will because the leeway is there. Don't blame the standards. It's just a matter of bringing it in. It's not in the law to allow private institutions to actually implement simplified due diligence. And for many countries, that is the first threshold to be crossed. Thank you.
Thank you, Louis. Anyone from this side? Okay. Yeah, go ahead, please. Yeah, you.
Sorry, my name is Anne Stella. I work for the Refugee Investment Network based in DC, and I'm the Senior Director East Africa. I had a question just on the basis of financial inclusion. My competence being in refugee investment, I wanted to understand what are the inputs, especially for organizations in host countries such as Kenya, Uganda, and Ethiopia, but in this case, EcoBank Uganda, and I think AMAL. What are the strategies you're putting in place to have financial inclusion, but within the refugee sector? Why I ask this question is because, I mean, refugees are vulnerable people, and they're completely, I would say, excluded from the ecosystem. So how can you be more involved, one, at a governmental level where you work with your local governments to fast track IDs for refugees, and second, are you open to alternative IDs that can make refugees included in your, maybe your portfolio of customers? Thank you.
Okay, thank you. I'll allow the panelists to take the 3 questions. So the first one was on financial inclusion and reality of undocumented migrants. I think Raymond directed to you that one. And then the other one was more a comment from Louis about that simplified due diligence is provided for within the FATF framework, and we should do more to take advantage of that because developed countries are actually utilizing that. And then your last question about refugees and what can be done to enhance their access. I'll start with Raymond. You can take the first question on financial inclusion and undocumented migrants.
No, thank you, Monsieur. We need to look at the root causes of undocumented migrants. Why are they undocumented? And deal with those root causes. If we don't know who we are including into the system, how is that sustainable for our economies and long-term development and ensuring that we are including the right people and not criminals? We need to deal with the root causes of the database for people that are in our countries, and that is the work that needs to be coordinated at the national level, at the right level. Make sure that you've got processes and ways of having the database and document the people and know who's who in the country. Because it's very difficult to ensure financial inclusion if you don't know who you are including. So the issue of database at the national level and making sure that you've got the right documentation and the right system of record keeping is of prime importance if we're going to succeed in our countries. We want to ensure inclusion, but we also want to improve the database and the knowledge of who's who in the country. That's of prime importance. That means there need to be coordination at the national level. The financial sector, the regulators, the departments of home affairs needs to have a proper coordination and discussion to achieve these goals. First, with documentation and database, and ensuring that you have projects that are run and driven to ensure that we achieve this purpose. Documenting people in a project planned environment with the timelines, with the proper budgets and drive to ensure that you've got a functional national database. That's of prime importance. You cannot drive financial inclusion without proper documentation. Because if you don't know who's who in the zoo, who are you including? So that's important. It goes together. We cannot achieve financial inclusion unless we have the proper database and the good project of ensuring that the database is up to date and it works and it's project driven with the timelines and proper budget. I think that's very important. We cannot drive financial inclusion without this other leg, which is to ensure that you've got proper documentation. Thank you, Musi.
Thank you, Raymond. Seth, you want to add?
Yes, please. Thank you very much. Yeah, just to make comment on that and also maybe to share best practices. In the case of Ghana, we have guidelines for the banking sector. So the Financial Intelligence Center and the Central Bank, we have anti-money laundering guidelines for the banking sector. Within the guideline, there's a component on account for asylum seekers and also refugees. And this should be a basic bank account. Now, to qualify for the account opening, there should be a letter from the director of Refugee Board or chairman of Refugee Board, just to confirm that indeed you're an asylum seeker in Ghana or a refugee. So with this, the financial institution is required to open basic bank accounts and also monitor transactions. So if it's a basic bank account and the inflows are, let's say, maybe beyond some threshold, then that may also raise suspicion, and that can also be confirmed as well. So in terms of best practices, that's what we are doing in Ghana, and I think it's been effective. Almost all the banks in Ghana, they do share the list of asylum seekers with the FIC or the FIU at least once a year. Then we also engage other state entities like maybe foreign affairs to know whether this person is an asylum seeker. Then the other comment from our boss here to do with simplified due diligence. Yes, indeed, within our sub-region, I'm talking about ECOWAS, most of the ECOWAS member states also take advantage of the FATF guidance or standards when it comes to SDD. The last country assessed was the Gambia. If you go through their mutual evaluation reports, there's a component on simplified due diligence. They have account for village account, as they call it. So if you live in a remote place or places and you want to have basic bank accounts or to be included, they will look at what their national risk assessment says and also make sure that at least you are onboarded as a customer. So we do take advantage of that. The same way, if you look at Ghana's national risk assessment, we have a component on SDD because of the World Bank tool that we used. And we make sure that we don't compromise on anti-money laundering issues, even though we promote financial inclusion. Thank you.
Thank you very much, Seth. We are rounding up now, and just half a minute to Moses and Mariam.
Thank you, Masiwa. And I'm just going to give response to the issue of refugees raised by one of the members. So the digital solutions that we have devised do not exclude refugees, correct? So we serve nationals, we serve the international community, but we also serve the refugee community because we are one of the biggest host countries in Africa. So we use the refugee ID, and then thanks to UNHCR, the new refugee ID has at least advanced features, so we are able to validate that. Thank you so much.
Okay, Mariam, just quickly.
Yes, I just wanted to add to what Moses just said. Yes, we do serve refugees, and the only challenge we have had with the refugee IDs is the duration of renewal when they expire. And I want to urge the immigration, if anybody is here, to process them faster to enable them get financial inclusion.
Thank you very much. Big thank you to our panelists and the perspectives that you have shared. Big thank you to all of you. I think the key issue that has been emphasized here is when you look at enabling access, financial access to low-income and rural households, it's not private sector versus regulators. It's about working together. It's also about understanding the conceptual foundations, which was touched on in the previous session, of some of the FATF provisions. And also that FATF provisions at the moment do provide for simplified due diligence, do provide for innovations to enable access for low-income and rural households. So thank you very much, everyone, for this. Back to you, Pedro.
Thank you, Masiwa. Thank you, panelists. If we can just take a group photo while I just make the announcements. You have 15 minutes for a coffee. So, I'm sorry? Less? Well, 4 o'clock. Oh, indeed. So the coffees are right there. Please go. In this room, we're starting in 11 minutes sharp.
Yeah, but nevertheless, don't see it.
Just as a reminder, as you leave, digitalizing international remittances, Morocco and Senegal is this room. Linking financial services to remittances, Ghana and Uganda is on conference room 3. I'll repeat, if you're interested in Morocco and Senegal digitizing international remittances, it's in this room. If you are, on the other hand, you're interested in Ghana and Uganda, linking financial services to remittances, it's conference room 3, across the hall. And now it gets specific. Thank you.
So, Paulus, may I kick off? This is Joe Mohindi in the English booth. Yes, Paulus, I'm on, and I wonder whether you can hear me as clearly as I can hear you. Great. You're most welcome. It's done. Thank you.
I see the French channel. Hello. Good morning, sir. Give me a second. I'm just... Oh, yeah. Good afternoon. Sorry, I'm still in the morning scenario. Yes. Can you say a few more words? Can you, let's say, count to 5? Yes, I can. Yes, I can hear you, I think, perfectly fine. So thank you very much. You're good.
Okay.
Okay, Chantal from the French booth, if you're with me, please turn on your microphone. Hello, hello. I can hear you properly. Thank you very much for sound checking with me. And the last person we have, Aviti Dickens. So if you're with me, please turn on your microphone.
1, 2, 3, 4. 1, 2. Can you hear me? I'm using. Let me see. I don't know whether it's Firefox or it's. Yes, I'm using headsets. Yes. Let me see. Actually, this is. Oh, yeah, this is Chrome, yes. So. No, it's Firefox. Sorry. Yes, I do. Okay, all right. Okay, I was. Okay, so I just copy this. Okay. All right, let me do that shortly. So I use Firefox or Chrome, sorry. Chrome, okay, all right. Here we go. Chrome.
Hello. I see you're back. So, Mr. Dickens, if you can, just turn on your microphone and we can redo the check.
Testing 1 2 1 2 testing 1 2 1 2 1 2 testing 1 2. Can you hear me? We're good. Okay, thank you. Thanks.
Hello, good afternoon. How are you? Did someone want Joe to speak? This is the English channel, and I presume it's another sound check. Hello, 1, 2, 3, 4. This is Thursday, 15th of June, and we are at the CR1 IFAD remittance truck. And I hope all is well. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. I hope you're all enjoying your stay in Kenya. This is a lovely time of the year when we've just had some rains and it's all green and not yet too cold, as it does get cold towards the end of this month and beginning of July in particular. Hello, whoever is checking the tech support, please tell me when to stop. I need to be economical with my calories for the next half hour. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So this is the time of the year when you've had a lot of rains, and the farmers are particularly happy because they can look forward to a pretty good harvest, especially of the main food crop, which is maize in this country. 1, 2, 3, 4. Hello, hello, hello. That sounds like Shannon. How are you, Shannon? I thought I recognized that voice. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I haven't been to Gigiri, Union HQ for an in-person meeting, so I haven't had the pleasure of meeting Shannon. But I can, yeah, yeah, you're speaking to Joe Mohindi. Yes, remember the Banyani? Hello, Shannon. How have you been? So are we done with the test, or do I continue? Hello, 1, 2, 3, 4, Shannon. Are we done with the test? You're checking the equipment. Hello, 1, 2, 3, 4. Keep going. I'm all right. I will survive. I'll make a speech about the budget because I've just paid my power bill and it's extremely high. And I'm not too sure that that is compatible with our aspirations supporting our not so well to do. But perhaps I should not be making political speeches on this particular platform. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Goodness gracious, I've been going on for 3 minutes. This is the longest sound check I've ever experienced. Hello, 1, 2, 3, 4. The English booth is online. 1, 2, 3, 4. 1, 2, 3, 4. Sound check. Hello, 1, 2, 3, 4. As you know, the Minister for Finance, who we call Njuguna, has been presenting his budget, the very first one for the current administration. And you are most welcome, Shannon. Bye.
No, I am. I know I leave me alone.
To start. Miriam. Miriam, on va commencer à s'installer.
Ok. Ils voulaient que je les appelle les uns après les autres, mais on va les installer quand on va gagner.
Moi, je dirais on gagne du temps.
Ouais.
Il va falloir les pousser. Donc, les points les plus importants, il ne faut pas les dire dans les deux premières minutes. Les points les plus importants, on ne les dit pas dans les 2 premières minutes. Avec les gens. Non, moi je dirais c'est qu'on commence à s'installer. Ouais. Moi je fais je t'annonce.
Je préfère commencer debout.
Ok. Bah c'est toi. J'annonce et tu te lèves. D'accord. Ladies and gentlemen, we're going to start this session. Just to confirm, you're in conference room 1, and this is about digitalizing international remittances, the example of Morocco and Senegal. So I will kindly ask for those that are speaking, please, to take your seats. I'll kindly ask everyone, please, if you can take your seats. Thank you for that. So before we start, I would just like to introduce the moderator, who will then introduce the rest of the panelists. She's a dual moderator because she's doing this on behalf of both the World Bank and IFAD, and it's Mariam Aziz Alawi. She's a remittances and financial inclusion specialist, and she will have the honor to moderate this panel. Let me just make the call as for the translation on how it works. If you want to hear in French or in English, you need to press the little logo that says United Nations, and once you do that, you will have, if you're on the right of the microphone, your speaker B. If you're on the left, your speaker A. You press that, and then you will have the channel below, either to choose from French or English. If you have any issue, please just raise your hand and we come and help you so we don't interrupt the panel.
Floor is 0, channel 0, English is channel 1, French is channel 2.
Okay, you heard it. So without that, thank you so much.
Thank you, Pedro. So I will switch right now in French. So.
This is one of the rare panels that are in French. And this is proof of diversity on one of our beautiful continents. We are here in West Africa with a panel that includes Senegal. We'll go northwards towards Morocco afterwards. The theme of this panel is digitalization of international remittances. We've spoken about this several times. The idea is not to be redundant, but to focus on these two countries, Morocco and Senegal. We may ask the question, why did we choose these two countries? In the panel, there's a very clear reason for that. And I'm sure you'll agree with me that when it comes to football, these countries are top in the continent, aren't they? And as regards remittances of funds, apparently Morocco is number 3, Senegal is 6th, so pretty close to the top. I'm going to share with you a few issues that I've had since yesterday, and which I'll share with you shortly. Before we continue, I hope if you have issues with hearing the interpreter, please don't hesitate to say so. Since yesterday, we've been speaking about remittances of funds. I would like, once again, I find myself with the complexity of sustainable development issues. I said to myself, we are talking about the contribution of funds transfer. Whether we contribute directly or indirectly towards sustainable development goals, the main focus is social inclusion. Mother who receives money from her son is able to handle and pay for her daily consumption to meet her daily needs. So this is also you also have the young lady who will be able to say, my studies were financed by my brother who works overseas. The grandfather who will say, is my grandson who sent us money to allow us to plant for this season. And we come to what we call financial inclusion. Now, financial inclusion, we're going to speak about that with our panelists, panel members. This financial inclusion can be accelerated with the digitization. Yesterday, we noted that a lot of speakers give us very rich experiences, and we'll be seeing in greater detail the cases of Morocco and Senegal. For Morocco, Miguel Fernandez, who has been on many panels, is here with us. We listen to him in other panels. Today he is actually wearing the Moroccan hat. And then we have Malik Sek, whom you have listened to previously, and will be presenting RIA. Then there's Alassana Gay, who will be presenting InTouch. He will be telling us what is InTouch and what do you work on. Then there are two ladies representing central banks. We have Jacqueline Dabu and Iblissam Anzawish. Can you please applaud them? Let's clap for them. Surely you can applaud more enthusiastically. We will be delving into a certain number of issues. In your guidelines, you've seen that what we are interested in is how to promote electronic portfolios, what are the incentives for the private sector, and also the regulatory environment. This morning, Mr. Brown said that to avoid, to be pragmatic and to have concrete elements to move forward. I can tell you that we have a panel here who are very experienced, each one with their own viewpoints on the relevant issues that we are dealing with. We'll be listening to them shortly. Morocco and Senegal are two very significant countries when it comes to remittances. There are two markets that are dynamic with a wide margin when it comes to mobile money and electronic wallets. Since you have microphones, don't hesitate to introduce yourselves, to speak about yourself and your background. And I will ask you to keep in mind that we are dealing with this issue of financial inclusion. We'll begin with Miguel. This morning, when you introduced yourself, you said that we are not talking about the last kilometer anymore. We are speaking about the last meter. Some questions, perhaps, to design. We're going to speak about the value chains. We're going to speak about ecosystems. And I would like us here to speak about value chains so that we can distinguish between which are the weak links and which areas could be improved upon by digitalization, how can improve the performance of value chains through mobile money and through the use of electronic wallets. Now, Miguel, you have the floor. Thank you very much for that introduction. Michelle Fernandez, I'm Chief Operating Officer in my institution. Our calling is to deal with European banks. Morocco is one of our partners, and we also deal with the Moroccan diaspora in Europe. I would like to come back to what has just been said about me in particular. Very rapidly, the real problem, one of the fundamental issues is that there's a lack of ecosystems to finalize a payment, to complete a payment, to, for instance, handle a remittance that was sent to a mobile wallet. There are other difficulties that come up also. I think we are still moving. The central bank is here with us, and they could perhaps complete what I'm saying. For our Moroccan clients, it's a question of culture, it's a question of habit, it's a question of practices at the national level. And some of these issues you cannot change overnight. In Europe, we don't speak about issues, some of these issues. Most people have bank accounts, and then you do have quite a few who don't have bank accounts. The most important is to try to support, not by forcing anyone to get involved. With our experience, we know that you should not impose some of these issues, some of these things. To the extent possible, you need to carry out some financial education. We are dealing here with a transition that takes a bit of time, and it may not be as easy as one may think offhand. So deal with the issues from the time funds are sent to the time they are received. Now, Alassane Gueye, how is you deal with this InTouch, which is an African fintech? Can you please introduce yourself a bit, and then thank you, Mariam, before answering your question and before bringing my contribution to bear. I would like to, first of all, say one or two words about InTouch, which is represented here. My colleagues in Kenya are here. We're here in Kenya. We have a presence in Kenya and in several other African countries. Today, InTouch is an African fintech which launched its operations in Senegal, especially with strategic partners such as Total. Today, we have acquired significant experience in the management of networks. We have more than 50,000 outlets in Africa. We have acquired a lot of experiences in terms of aggregation of digital accounts. We have many services that we have integrated in all the countries where we have a presence. You can therefore use InTouch services. You can aggregate services of mobile operators, and sometimes we play the role of facilitating interoperability in several countries, which means that today we have a certain knowledge of the network, which is very important in the financial circuit. We speak about financial inclusion, and when we talk of this, we are referring to opening an account, whether it's a bank account or an electronic money account. Obviously, when you open an account, to use it, you have to have the funds. That's the reason why we have a certain experience in this area. Now, for Senegal, very rapidly, I would like to say that over the last few years, there have been an upsurge of activity, a very dynamic development in mobile money. We have 21 million accounts that have been opened. We are only 17 million in Senegal, so if you only refer to this number of accounts, the ratio is way beyond 100%. But this may be the tree that hides the forests, especially if you look at the number of active accounts and the customers who may, some of them have more than 10 accounts. So the lady who's speaking for BCAO will tell us about this. There has been significant progress, and as regards the link with remittances, international remittances, we have noted that between 2021 and 22, there have been a shift in volumes towards wallets. $12 million have been recorded, but now we're talking about more than $500 million that are circulating. However, when this gets into the accounts, it's withdrawn almost immediately. We'll perhaps go on with Malik Sek and take up what has been said by Alassane on the fact that once the funds hit an account, they're withdrawn immediately. What is the place of mobile money? What are the developments of the M-wallet in Senegal? In relation to yourself, your own experience and the knowledge of the market in Senegal in particular, can you tell us what's the situation there? Thank you. I would like to introduce myself. My name is Malik Sek. I'm the managing director for our organization. We are present in many countries around the world.
Morocco and Senegal are two important countries for us, for the other actors too, with the challenges that we have Nigeria. So these are the top 5 or top 10 countries. But they're two different markets, Morocco and Senegal. They're different relatively. Senegal, the partners are banks directly, and these ones are developing agents. In Senegal, we have important domestic remittances, which is done by two operators. So there's a strong or a huge wallet rate, and it's also a very high uptake. So we have about 15 selling points. So there is a significant domestic market. And then there is also a very strong buy-in. In Morocco, the difference is that central bank gives permission to some companies and banks also to do the transfers, but banks in Morocco have a subsidiary you have other banks that have a subsidiary. The inclusion is very low when it comes to wallet, 7 million, which is small relatively. And there is no acceptance, but the central bank is trying to push for the development of these wallets. We have a central bank with us here, and we're going to talk to them about this. They are trying to push all the social remittances to be paid through the wallets to develop these wallets and kind of have some acceptance. So money is actually cash out. And that is for us and also for other competitors. So that is the difference between the two markets, but the common thread is the behavior of the clients. It's the same. They send regularly and several times per month. It's hence the reason why we say they are very important markets. Tisamba, you are going to talk about financial inclusion, but when it comes to the banking, the rates of banking and also M-wallets. To respond to the question and to supplement, firstly, I'd like to remind us of the context. Like you have clarified, money transfer play an important role, economically speaking, in Morocco because we have a significant volume, 109 billion dirhams. That is about 8% of our GDP, and also 16% increase. Even the transfer in domestic level is very important when it comes to Shintech's figures. We have 35% of adults that are using this transfer at the national level, and we're seeing an increase of 17% when it comes to 2017. However, I would like to underscore and recognize the growth that we have seen in payments in the last couple of years, e-payments, which have seen a positive development over an average of 13% between 2016 and 2019, and 19% during COVID and post-COVID. So we also need to recognize that when it comes to M-wallet, the volumes are witnessing significant volumes, 6 million M-wallets in end of 2022. So this is a growth of about 80% growth. So this is very interesting growth. However, we also note that cash is king. If we come to M-wallet, your activation rate is limited. If we look at the remittance data at the national level, 40% of the people are using informal means. So we are asking ourselves about the hurdles of digitization of financial inclusion, which are linked to supply and demand. So when you're talking about supply, we're looking at studies that allowed us to examine in depth the hurdles towards digitization. The first one is access to formal financial services, especially in rural areas. So we have a level of disparities that is significant, much as we have seen significant growth in the last couple of years, particularly thanks to payment systems. But a third of communities in the villages have access to them. So this is something that is important in financial inclusion. Another important thing, if we come back to the M-wallet and payments issue, which segs in with the ecosystem issue. The network is less developed in Morocco, and this limits the growth of adoption and penetration of M-wallet and electronic payments. So we're asking ourselves, why isn't this network developed? We did a study recently, and the results have just been shared, and we noted that there's a lack of knowledge for the benefits of mobile payments by traders, and this is an important aspect. And this ignorance, it is also for demand. When we launched the Greenback initiative in Morocco, we looked at qualitative data that showed us that there is a suspicion of fear and low level of knowledge when it comes to the available options to transfer money. And we seized the opportunity to present the different options, including M-wallet. And what we got from the study, the users of money transfer do not have knowledge of these new means of payment. They have fears when it comes to the advantages, how to use them, the tariffs and the transparency. When it comes to the supply, we're looking at the ecosystem. We have an informal sector which is very big. Our research team did a study on the informal sector, and what we got was that in the informal sector, the flows are in cash. So those are the aspects that look at or give us areas that we can be working with to unlock the potential of digitization. So we need to unlock the potential of digitization. I go back to Jacqueline for Central Bank of West African Nations, and you are the headquarters. Same question, but from a regulator's perspective, and also the department that is looking at financial inclusion. I would like you to speak to the challenges posed by our Senegalese colleague, digitization, payment methods, and potential of wallets and the sustainability of these tools. Thank you. Thank you for giving Central Bank of West African countries to take the floor. We are 8 countries, 140 million people, 125 banks, and 31 fintech that are in payment. Other than the data, I would like to note that the good indicators from Senegal are actually looking at the regional strategy that was drafted by the central bank in 2016. We're looking at the 5 pillars of the strategy, and they're looking at financial innovation. Financial innovation is about digitization, and here we have digitization for financial institutions, digitization for the banks, and also digitization for microfinance. We have also asked every state part of the union to have their national financial inclusion strategy. So these strategies looked together mean that the market has grown significantly in Senegal. If I take this recent data in this country in 2019 and 2022, the number of points of service have been doubled. We have 380 points of services. So today the beneficiaries can receive money on their phones directly, and the acceptance rate is very wide. We also have a regulatory framework which would allow different actors to work in the market and to provide complementary services. The people who have at the bank rate is 70%, And in Senegal, the financial inclusion is 80%. And we also have many of them who are banked through phones. Cash is key, like it has been said, and this could be explained by the fact that the network could be low in rural areas, but even the existing networks could run into challenges of liquidity, infrastructure that is not efficient. We have also looked at other difficulties. We did a study last year, and we saw supply and demand side challenges. For demand, the poor people do not have easy access to telephone services, Android or a simple phone. It's not easy for them to get that device. If they have it, using it is not automatic. You also have the issue of rates, which is a deterrent for people. You also have financial literacy. For supply, that pushes people to keeping cash. Having a bank account is a luxury in many areas. The paperwork is a lot, and also the tariffs are not interesting. The supply of services is not in line with the demand of or the needs of the poor people. Thank you very much. Thank you for underscoring that issue of vulnerability. We're looking at vulnerability where people cannot have a simple mobile device. I'm not talking about a digital, a smartphone. Thank you for underscoring that. Sometimes we think all you need is to have a phone or to want it. The transition is easy, but we are talking about vulnerable people, vulnerable when it comes to accessing technology, literacy, and then financial literacy itself. This transition from cash to electronic money, e-money, you've talked about some support system that could be put in place. I'm going to talk to private actors because these are clients. What type of support or services could be put in place to incentivize the people to accept these means? And I'm also asking the question with regard to other products that could be attractive. For example, microcredits, savings, all those aspects. Could these contribute to fast-track adoption of these methods? Yes. From money trans, the entry points should be a current account which is dedicated to financial services for migrants. We've come up with a product, a current account. We run the account, and we have attached benefits that can only be gotten when you have a mobile account. So we tell them that we're going to reduce the cost for the end client. We have also attached an insurance product, but not a typical insurance. This is a specific insurance which has been built for immigrants. We are going to contribute for last expense, repatriation of remains. the flow is not going to stop at a certain point. We guarantee a certain minimum, looking at the volume that was being sent, so that we don't have a hard stop over the remittances. Other than that, we have a project to add microfinance, buy now and pay later. So we're going to have some products. We're going to give tickets to cross the Mediterranean Sea. The most important thing is microfinance and insurance. Thank you. For Senegal, In Touch, with regard to these products, they could be interesting and they could contribute. Could it be like products that could hook up people to wallet? Yes, indeed. At InTouch, we are trying to talk up projects of financial inclusion, because we are supporting some of our partners in this regard. I can talk about an experience we are doing with MasterCard Foundation, where in this program, it's called 10,000 Jamba. Jamba in Wolof means it's courage. So all the young people who'd like to have some work in the digital field, we have a program for that. And these young people are recruited and supported, given financial literacy to set up selling points. We give them payment services for their activities, and this is contributing to financial inclusion. We also have credit or loans. You could have overnight loans, a small amount.
Travailleurs dans des activités qui nécessitent d'avoir du cash tout de suite, de revendre tout de suite et d'encaisser tout de suite.
Merci. Peut-être, Malik, si vous voulez bien, vous avez dit hier que pour vous, le réseau d'agents est très important. Là, on a affaire à un changement de business model. Hein, c'est-à-dire, est-ce qu'on ne met pas en péril l'activité d'un certain nombre d'agents, c'est-à-dire en transitant? Je ne vais pas dire que le tout digital, dire quelle est la place ou le devenir de ces agents-là qui voient leur marge diminuer, qui voient peut-être il n'y a plus de compétitivité dans le marché?
Oui.
Notamment en zone rurale. Hein.
Oui.
Ça s'accentue en zone rurale.
En fait, d'abord notre contribution par rapport à l'inclusion financière dans les pays de réception.
In the recipient countries, we've signed a group contract with the three mobile operators, MTN, Orange, and Airtel. We are also working with other people to get to the wallet. Secondly, we have a bank deposit department which is doing a lot of promotion with the banks in Africa, Senegal, and Morocco, with interesting rates to push diaspora to open accounts for themselves or for their family members. Recently, we had a project with a regional bank to enable people who are in the diaspora to open an account for themselves or their family members from Europe, and then the bank is going to do a KYC. Regularly, we are trying to develop cash, which is king, but also to develop e-wallets. But to the physical network, which in Senegal, we even saw a strike by the agents. The rates were low. The people who are there were actually refusing to pay. After that, some of the telecom operators, they charge their tariffs, and today these are actually interesting products. So now it's not about transaction, but this is kind of a merry-go-round or discounts. So the agents are adapting themselves. So now we are seeing an increase in the number of agents because they've understood that this is additional business for them, but it is also a volume business. The more you do transactions, the more you get money. Do you want to respond to that business model issue and also the agency? I'm not going to talk about the excluded areas. As a central bank, are we going to go all digital, all while excluding some other micro entrepreneurs? Indeed, we do not want digital technology to exclude others. As a regulator and the people running the national digital system, we wanted to identify the obstacles. We even looked at the issue of business model. To give you an example, on the main initiatives that we've undertaken as a central bank, firstly, we worked on developing the ecosystem with the objective of having credibility in mobile payments and build confidence so that people can use this in a safe manner, and they can use even mobile payments so that in the end they can meet specific needs. It is important for us to look at the needs of the citizen, financial needs. So we acted on the regulatory and legal framework, noting that we have significant objectives in this means of payment. We've worked on the governance. We have also worked on fiscal incentives to spur the system. We've also worked on literacy and awareness creation, and working with partners with the ministries that are important, like Ministry of Trade. We've had several sessions with the traders to tell them about value add as a business model. If you come to the issue of business model, indeed, we did a study in collaboration with SEGA that underscored the issue of business model and the issue of sustainability of the models or these agents. There is an investment to be made by the institutions, noting that we've talked about the importance of the legal framework. Bank Maghreb is actually having its ears on the ground. We put in place e-payment in the last 5 years, and we've revised our legal framework twice. We've been listening, and we want to ease conditions for enrolling agents and also to help people to open accounts. Thank you very much. The same question for Central Bank of West Africa. For the sustainability of the agents, how do you address this? To ensure sustainability, we need to keep the clients. We need to have offers that are based on value chain. We did a study in cocoa growing area in Cote d'Ivoire, and it was successful. And we noted that farmers did not need to do cash out and cash in, and money was circulated in a closed circuit. And that is what we need to be getting at. With the central bank, what we are doing to sustain the momentum, firstly, I would like to say that we are on the client side. For us, the client is to protect the clients and to ensure good rates for the clients. And this will actually have an impact on the agents' network. Yet the agents are the backbone of financial inclusion. We could have a system where we have a system where those who are in urban areas have more commissions. So we could have a compensation system to support business in rural areas. Not forgetting that in rural areas, activities are seasonal, so sometimes the points of service are not working. So we need to see how to maintain business in those areas. We also need to give a status to these agents, because oftentimes there are people who try to do it as a side business, and because of lack of cash flow, they might not be efficient. So we need to think through a framework so that we give them a status and the resources to be viable over time. Thank you. I don't know whether we still have time. I wanted to talk about financial and economic inclusion of women. This is close to my heart. How do you address this vulnerable group, extremely vulnerable in certain cases? We were talking a short while ago about access to technology. Sometimes it is not easy. You have cultural barriers, some beyond technological barriers, even using the devices themselves. It is an open question to all of you. If we have, as we wait for questions coming from the floor. Jacqueline, with Central Bank, we are coming up with a strategy specific for women to improve their financial inclusion. We are also working on digital identification of financial services users, and we think that women who are running SMEs, we have many SMEs that have been identified that they need credit, and they are actually women-led business. This could help. We also have an interoperability project, a financial literacy project that we're going to launch this year, which has two prongs. We're going to do communication at the union level to sensitize the populations on using financial services and the trust we need to have in financial institutions. We are also working with the ministries of education, universities on modules that we are going to put in the curriculum. We also have a specific action for women.
Inclusion digitale, financière. Effectivement. Alors, notre côté, on a d'abord défini deux segments prioritaires des femmes, les femmes entrepreneurs et...
We define two priorities for women. For the woman in business and the rural woman. We needed to analyze data disaggregated according to sex, and to come up with value chain proposals for women in business. For the rural women, we launched an ambitious national plan for developing their empowerment. We carried this out over a period of 3 years. made it possible to identify the real challenges faced by these rural women. And now we are refining the areas in which we can intervene and also to see how we can support them. Regarding education, we have dedicated programs for digital education. There's a WhatsApp tool that we use, making it possible to have a mechanism that actually get directly to our target groups, especially the rural women. Thank you very much. Now, I'd like to support with an experience we've had on the program that we were speaking about of financial inclusion for the youth. When we looked at the rate of recruitment that we had, 87% were women, but we had initially an objective of 60%. Thank you very much. We need to manage our time better. We don't have a lot of time left. Some comments from the participants? Thank you very much. Please bring closer your microphone. I'm Mambaidu Tabura from Mali. I would like to thank the panelists for those excellent presentations. I just have one question. These institutions play a very significant role in remittances by migrant people in West Africa, especially in the BCA region. These organizations have problems of limits that have been fixed. Now, the problem is this. As of today, the regulations, have they been structured? Can they be structured to take into account the significance of these transfers and to facilitate especially the rural zones, the rural areas for international financial transfers? Thank you. Second question. Now we can ask together. You have the floor. Thank you very much. I'm in market research. It's not a question, it's just a comment. As soon as French speakers came here to present their issues, you have activated the interpreters. What I've noticed is that since we came, I noticed that there are many French speakers. I am noting an observation. When the French-speaking panelists came, you actually got the interpretation system moving, working, so that we can have interpretation. Since we came, we've noticed that there are some Francophone participants who don't speak English, but we didn't have interpreters. How is this that the French language doesn't seem to receive the attention that they should? We think it's very important. Panelists should, I'll come back to you shortly. I think it's more to the regulators the question was asked. Today, looking at all these initiatives that we are dealing with the microfinance institutions, digitization of these transfers, work started well before COVID, and I think this year the ratios are on the upswing. I would like to say that we have initiatives underway to make it possible for microfinance institutions, just a bit like GMOI, we have initiatives making it possible to make information more readily available to carry out real-time transactions. You do need the information that I'm talking about. Now we are going to come to the end of this session shortly. I would like to thank you all, the panelists, participants, and the organizers who have made a lot of effort for us to get together, for us to be here today. Thank you very much for everything you had to do. And we'll be having a photo, but thereafter, enjoy your coffee. Let's applaud. Thank you very much. Before we move on to the next panel, I would like to speak about the interpreters. There are many languages. It's only for practical reasons that we used English mainly, but we provided interpretation for this particular panel. There are lots of other languages. There's Portuguese and so on. So it's really a question of practical options. So we are also taking into account the cost considerations. I can give you figures. To have interpretation for 3 days would have cost a lot of money, but since it's an event which is really free of charge for participants, I'm sure you've appreciated. We unfortunately did not have the budget to provide interpretation for other languages.
Is about Kenya, enabling rural people to access remittances through partnership. The case of Kenya. For those that are interested on tackling informal markets, the Gambia and South Africa, this will be held in conference room 3. For the moderator, do we have the moderator? There you go. For the moderator of this, I'll have the honor of introducing David Berno. He's Remittances and Inclusive Digital Finance Officer of the FFR, based here in Kenya. And he will be the moderator today for this. So I will invite the panelists, if you're already here, to come onto stage, and we'll let also allow a few minutes to get the other participants come in. So, okay, some other panelists are coming, so we will address that. In the meantime, I give you the floor and control.
Thank you, Pedro. Thank you, Pedro. Thank you all. Please invite Juliet, Romana, Peter. Please come closer. Yes. David, there is an extra seat. I think we might not need, just one for Betty that is coming. So I know that is the last session of the day, so we are delighted to have this space, but I believe that you're also tired, so we'll try to keep the discussion interesting as much as possible. As Pedro mentioned, I'm the FFR country coordinator for Kenya and Uganda, and I'm delighted to have seen a lot of Ugandans as well these days at the summit, so I'm glad to have seen such engagement. Our discussion will be focusing on enabling rural people to access international remittances. And I'm delighted to discuss this with distinguished panelists on how to handle rural people to access remittance through partnership. Kenya has over 5,000 SACCOs, of which 361 are regulated by SASTRA, the national authority established in 2008 as recognition of SACCO's relevance within the financial sector. SACCO presence is critical, especially in rural areas, where these institutions are often the sole provider of financial services. According to the existing regulatory framework, SACCOs are not entitled to handle international remittances service directly. Therefore, SACCO collaborate with banks to allow their members to access remittances. The panel aims to shed light on current remittance partnership mechanisms between SACCO and banks and on the fintech role within this space, in enhancing SACCO digitalization and in supporting improved remittance-related service at last mile. Okay, so waiting for Betty, but in the meantime, I'm happy to introduce my panelists, starting with Romana. Romana Radboot, Country General Manager for Interswitch Kenya. I think we can move with Peter Njuguna, CEO of Sazra, and then we have Juliet Mburu, Senior Digital Financial Infrastructure Specialist at FSD Kenya. Maybe in the interest of time, to allow Betty to join in our conversation, I'll give you 1 minute time for an intro if you wish. Romana, if you wish, break the ice.
Good afternoon, everybody. As you hear, my name is Romana Rajput, and I look after Interswitch's business in Kenya. Interswitch is a Pan-African payment company. We help build ecosystems across the continent, born in Nigeria originally, but we are present in East Africa, in Kenya, Uganda, and the DRC. We help financial institutions and fintechs and indeed international remittance companies, transmit money around. That's what we do. And we're very excited to be here today as part of this discussion, a very important discussion about our partnership with SACCOs. Thank you very much.
Thank you, and thank you so much, Romana. Over to Mr. Njuna, CEO of Sazra.
Thank you. Good evening, everyone. Yes, I'm Peter, and I oversee a SACCO industry through the regulator, SACCO-SAT Regulatory Authority, which is 12 years old, and we oversee a sector that is basically community-based financial institutions, that is savings and credit cooperatives, which today hold assets of $5 billion, serving to be exact, 6.4 million Kenyans, and they are spread across the country. And they have evolved to offer full service, full range of services to their clients as the clients demand. And therefore, it's an honor to be here to share their experience that is emerging on remittances, because we've seen SACCOs play in that space. And I think as we have this conversation, then we can deepen their reach, and that will mean they can provide the last mile to reach more Kenyans who are in rural Kenya. Thank you very much.
Thank you so much, Peter. Juliet, over to you.
Yeah, good afternoon, everyone. My name is Juliet Mburu. I work for an organization called Financial Sector Deepening Kenya, or in short, FSD Kenya. Our key mandate is really to support Kenya achieve its long-term financial sector goals broadly. But basically how we do that is we work with the government, we work with the industry, the financial sector industry, to help to develop solutions that address the real world issues. The key target populations that we are interested in is low-income livelihoods, low-income households, small and micro businesses, and underserved groups such as, traditionally underserved groups such as women and youth. So my role at FSD is I lead the work around digital payments, as well as the work around digital economy. So I work with a lot of the colleagues even in the room around payments, digital, working on some projects around digital ID, remittances, work a lot with a lot of you here with industry associations. And yes, just happy to be here. Thank you.
Good. Excellent. Thank you so much. I think we can start our conversation, and I believe Betty will jump in when she's arrived. The first question is for Peter. Peter, what drives the interest at the SACCO level to be part of the international remittance value chain? Do you know how many SACCO are already active in this space, and what is the most common setting these entities put in place?
Thank you, David, for that question. Yeah, the interest that SACCOs are having remittances is driven by one, a growing demand for their services. In Kenya, SACCOs cut across from the high-income earners to the low-income earners, right in the village. And that has seen increasing demand as they grow to offer banking services, and as they also respond to the demands of their customers. SACCOs have opened their common bonds. If it's a teacher or coffee-based or dairy farmer SACCO, they are serving the entire community. And that means there are a lot of demand for their services. Increasingly from the traditional savings and credit, they are now in payment space. But as they open their common bonds, we've also seen in Kenya, a lot of people looking for opportunities out there, either employment or even business. And SACCOs are also, serving business community. So we have seen their interest in, remittances growing from that push from their customers, and they have responded. And what form is that taking? By and large, SACCOs, because they are not payment service providers by their nature, they partner with payment service providers, including banks, and payment service providers like, say, InterSwitch and the like, and we have seen that working. So that the remittances will not necessarily terminate at their SACCO accounts, seated in banks. So I think them take that form, partnering with the international money remittances, as well as banks who offer that service. So broadly, that is a form we've taken, and I think their push is basically to deepen financial inclusion to the lowest point. Thank you very much.
Thank you, Peter. Just to know, do you know how many of them are active in this space? If any insight on that?
Very well. One, we may not have precise number, but I think it's a significant number. And I think that's why this conversation we are having with the FSD, IFAD, to explore and get statistics. But I think from the data we've collected, there are SACCOs that have been in that space for, even 10 years through these partnerships. But the precise number is something that we hope to achieve through the discussions we're having with FSD and IFAD to do a survey on that line. Thank you.
Okay, thank you. Thank you so much. In the meantime, I saw Betty joining us. Welcome, Betty. And I hope you have a mic. Good, fantastic. Betty is the CEO at CBL Credit Bank Limited, Kenya. Betty, I would love you to address a question to you. You recently announced a partnership with SACCO to extend remittances to their members under an IFAD project framework. Can you tell us more about this strategic partnership? How did you identify the SACCO to partner with, and what's the final cost for senders to channel remittances to SACCO customers?
I hope you can hear me. Good evening, everyone. Sorry to have come a bit late. So yes, we've recently gone into partnership with SACCOs, and for us, I think we see it as part of our financial inclusion and deepening. I think the first question is, how did we identify the SACCOs? So first and foremost, because we are a licensed bank and a regulated bank. So the first thing that we needed to do was, first of all, to look at the standing of the SACCOs. So we look at the financial standing of the SACCOs to the extent that, as and when required, they can avail the liquidity. We've also looked at the IT infrastructure just to make sure that they're able to to network with all the parties, because then we are looking at our SACCOs as our means to get to the rural areas. The other criteria that we also look at is systems and processes, because obviously they are an extension of the bank being quite accountable and being able to be transparent and a trust partner. So we look at those processes as well. And the final thing that we look at is the population in terms of the number of people that they have in their SACCOs. So that's what we look at. And in terms of cost, can I just go ahead and answer that?
Yes.
Yeah, so it's very interesting because I think statistics that we've been able to obtain has shown that a bigger component of what would be, call it an impediment, so to speak, is the cost of remittances. And especially it differs depending on the corridors in which the various parties are coming from. So what we've done as a bank is to be able to look at some of these costs. We have partnership like InterSwitch, as you can see here. We are riding on the rails of RIA, and we've been able to actually bring down that cost by 50%. And I can state that at the moment in the industry, we are the lowest. And that cost could even come down a little depending on the corridors.
Thank you, Betty. Thank you so much. Romana, InterSwitch is already providing services to SACCO. Can you share your experience from a fintech perspective, and how remittance will be integrated as part of your service provision?
Thank you, David. So InterSwitch, is a payment service provider. We're regulated by the Central Bank of Kenya. So we're a trusted partner in the payment space. We offer services to banks, and we saw that it was very possible with our platforms to extend those to the SACCOs. So today we serve approximately 7 SACCOs. We offer them services like we offer them cards, we offer them ATM outsource services, we offer them collect and pay solutions. So it's not a big stretch of the imagination if we can offer remittance services, inward remittance or support remittance service to the SACCO stored value or SACCO accounts. So this is what we are working together with our partners like Credit Bank and SASTRA and FSD to do, and IFAD, of course.
Okay, thanks. Moving to Juliet, FSD Kenya. Can you tell us more about your partnership with SASTRA in the area of international remittances? We recently signed an agreement between FSD Kenya and IFAD with the collaboration of SASTRA. So we would like to know more about it, and also what are the expected outcomes of it?
Yeah, thank you, David. So based on FSD's mandate, like I said, the key target groups that we are focused on are really a huge segment of the SACCO membership. So we're very excited to have just signed a partnership to work with SASTRA. And this is an IFAD funded project. Basically, what the project seeks to do is just to really understand how SACCOs can be facilitated to offer remittances. So looking at what are the challenges in the market, what are the barriers, and what are the opportunities that exist. So the project basically has 3 components, and this first part is just mainly to do the study and really understand the landscape. So the 3 components are, we're first going to be looking at on the demand side, and here we're going to be looking at there's a lot of work that has been done, so we're going to be looking at what data does exist. We're also really looking forward to, and I think it was mentioned, I believe yesterday, we're going to be looking forward to the first ever national remittances survey that the CBK is going to be running. We actually also, as FSD, we're also partnering with CBK on this project together with Kenya National Bureau of Statistics. So we're really looking forward to the insights that we'll get out of that survey. survey. We're also going to be looking at talking at the senders and the receivers of remittances, and here we're going to be looking at people that receive remittances through SACCOs, because they are those that get them through SACCOs and those that do not, to just really understand what's going on there. We'll be talking to migrants that send remittances. We'll be talking to key stakeholders in the market that, such as the Kenya Diaspora Association, the State Department of Diaspora Affairs. I believe they were here yesterday, the first day. So just really looking at that whole side of the demand side of remittances. We're also then going to look at the supply side. So talking to the SACCOs, and here we're going to be talking to both the SACCOs that are playing in the remittance space and those that are not. We're going to be looking at the facilitators of these remittances, so talking to the banks, the fintechs, the mobile money operators, IMTOs. And then another very key area that we're really looking forward to is this new space that the SACCO industry through SASRA are going to be currently developing, which is this shared SACCO platform, and seeing how can this platform really be leveraged to help improve remittances through SACCOs. And then the third key area is actually we're going to be looking at the regulatory space. So just looking at what constraints are there in the market in terms of legal and regulation, and trying to see how those can be addressed. So it's a project that we're really looking forward to. The outcomes we hope to get, two main things. First one being around providing insights to the market, so that the market and the industry can really get some deep insights as to where they can play and where they can leverage, and what products they can build on what we find, and also just making recommendations as to what gaps exist in terms of regulation. So it's a project that we're really looking forward to kick off, and yeah, we hope to be inviting all of you to, when we're disseminating the findings, to validate that. Thanks.
Thank you. Thank you, Juliet. Before moving ahead with the other question, I would love to hear a quick reaction from the other panelists on the aspect that you believe that are relevant for the FSD Kenya study to unlock SACCO potentiality to extend remittances in the rural areas. What are the needs and information that you believe are relevant for the industry and for the FSD study should take into account to provide additional value and impact? For anyone, I mean,
thank you.
Peter, yeah.
I think, as we said, with a growing interest in SACCOs and the SACCOs seeking to deepen their reach, I think it will be interesting to understand, one, the demographics of the people driving this, because you're seeing there are people, Kenyans working out there. So it would be very interesting to see what kind of demographics are these, what are the source markets for these, but more importantly is the costs, because like Betty says, we believe SACCOs, they are deposit-taking institutions, and they are trying their best to offer, value to their services to their members. But we also know they are constrained, through technology, because to offer payment solutions, they got to partner with other partners. So we got to look for an optimal model as we do the study from a demand and supply side to see how do we address this cost issue, because it limits. And because when you channel this money, if you are able to address some of these, then it means you'll attract more people to a formal system where you can actually see what kind of remittance. We know already is a big player, and I think we can only scale this if we address the cost question. So for us, that really would be very key to see what are the kind of cost through the channels that are preferred, and how can we address those because Kenya financial sector development is anchored on 3 dimensions. Efficiency is one. Then there's a question of stability and access. If you don't address inefficiency, the efficiency question, it undermines access as well as stability from where we see. So it's critical that those elements be looked at.
Thank you, Peter. Romana, you wish to say something, or Betty, on this regard? Any reaction? Otherwise, we move ahead with the discussion.
I believe the question is on financial inclusion.
The question is regarding the FSD Kenya study on the SACCO. So, what are the data that you think they should take into account, to enlarge and to provide a better market insight for other actors to decide to move into this market?
All right, that's actually a very good question, and FSD has been a leader in terms of data and statistics, and I think for us as banks and SACCOs as well, we really leverage and mine on data and statistics, first of all, to be able to derive what we call behavioral and social indicators, because then when you're dealing with individuals, you probably need to be able to map out certain patterns, and once we get the remittances as well, depending on the outbound, inbound, as a bank, we can be able to leverage on that data to be able to build a specific credit score for individuals so that as and when they want to access other financial services that could even include some sort of credits, then we don't spend a lot of time trying to figure out what limits they do qualify for. And I think the other thing about data as well is that data then would sharpen the decisioning in terms of the products, to be able to offer. It would actually be able to give you information about consumer preferences and needs, and therefore, as and when you're interacting with the SACCOs and the population, the rural population, it will not be from a prescriptive angle, but then it's more to really tailor solutions to address specific needs.
Okay, great. Thanks a lot, Betty. And I will stay with you for the next question regarding the value proposition for your organization to invest in the remittance market through a partnership with SACCOs. And in this regard, it would be great also to understand what are the foreseeable challenges to provide remittance under this partnership framework, considering the existing regulatory framework. So over to you again.
Yeah, thank you, David. And I think if we do understand the theme of this session, really enabling rural people to access remittances through SACCOs and fintech partnerships, that really is the value proposition. And for us, we actually found something that we probably call a latent need that had not been met before. And for us, the value proposition really had to do with revenue generation, whereby the arguable point would be that once we offer the remittance services, we provide additional revenue stream for the bank, SACCOs, and the fintechs, transaction fees, foreign exchange fees, and other related charges that contribute to sustainable income. Because it's one thing to have remittances in and out, but normally the retention is what would probably contribute to the income. The other thing that we're looking at as well in terms of value proposition is customer retention and acquisition, where we are saying that the retention can actually enhance loyalty and attraction and provide convenience and cost-effective remittances. Partnerships, collaborating on partnerships, because if you see all of us sitting around this room, we have different strengths, and therefore we're looking at leveraging on our synergies. So collaborating with the institutions and fintechs allows utilization of established infrastructure, technology solutions, and expertise, and as well enhancing service offering, of operational efficiency, etc. Most important, and it's something I'd alluded to earlier, is financial inclusion, where we say we contribute to financial inclusion by providing access to formal financial services for individuals who may have limited or no access completely to traditional banking channels, and therefore empowers the recipients to save, invest, engage in other financial activities. I think very quickly I'll just rush through the challenges. And the challenges as we see today is the ever-evolving regulatory environment. I think the biggest challenge that we have today is the challenge of really being able to predict what next. And what we see is regulatory compliance, where compliance now with regulatory frameworks comes at a cost. Particularly around anti-money laundering, know your customer regulations being a critical challenge. Adhering to these regulations require robust systems and processes to ensure due diligence. The other challenge, of course, is technology infrastructure, and we are inviting all the circles and the parties to ride on our infrastructure. As Credit Bank, we're on the latest terminals. I'm not advertising T24, but you're on the latest T24 core banking system that is scalable and it has flexibility. And that way we are able to address the challenge of seamless remittances services and improve connectivity and of course, friendly interfaces. At the moment, happy to announce that we are working on our APIs. We have like about 7 hero APIs, and that really helps to ring-fence and integrate an entire ecosystem. The challenges, of course, is operational efficiencies. Also, the question is, how do we come to address this? We address this by streamlining operational processes, such as remittance tracking, reconciliation, fund settlement, and of course, we more or less become the back office. And we reduce the requirement for manual interventions. I think finally is customer experience. That war kind of experience where we want to deliver seamless and customer-centric remittances and offer diverse channels for initiating transactions, so diverse channels so that you're not limited. I think in the interest of time, I'll also just talk about market education and awareness. It has been a challenge because where you do not have information, then there's definitely asymmetry and it causes a lot of distortion. So here we want to raise awareness about the benefits and reliability and of course engage in educational campaigns. We already have what we are calling eHub for financial literacy, and it will not be fair for me not to talk about the challenge of collaborating with regulatory authorities here, where we're saying that we can help shape a conducive regulatory environment. And as bankers, we also sit in the advocacy body of KBA, so we shape the policy, we also run with the advocacy, and also we participate, in terms of bridging in the gaps between what exists and what does not exist at this point.
Great, thank you so much. Very rich answer. And Romana, I wish to ask you the same question regarding the value-added proposition for InterSwitch.
Yeah, for us, of course, we want to bring SACCOs into the mainstream of the payment ecosystem. They are to be considered equal partners, but they struggle with certain aspects, and those aspects are around technology. So if every SACCO in Kenya has to put in a core banking system, some believe they have to put in a switch and they have to put other, solutions like this, it is extremely expensive. So partners like InterSwitch, what we try to do is we share the platform with all the partners, and this is how we can bring down the cost of technology services to the SACCOs. So we're trying to show them that when you share the services together as SACCOs, what you do is you reduce the cost. And when you share the services, then you create an ecosystem with which now you can interact and do various things. So this is a key area for InterSwitch. We are talking about remittances. Today, you want to bring remittances from the diaspora, but we also want to talk about remittances within Africa. And since we are a Pan-African player, we will be very keen to work in this space to ensure that remittances between African countries is also as possible. And we will be able to facilitate that with shared services. Thank you.
Thank you, Romana. Moving to the next question for Juliet. Remittances and financial inclusion, in the sense, how can extending remittances through SACCOs, through this partnership model, can fuel financial inclusion, especially in the rural areas? and how SACCO and partners can leverage these flows of money to enhance resilience and livelihood of a rural population.
Okay, thank you, David. So the way traditionally we looked at financial inclusion as mostly around access. And Kenya is doing quite well in that area. I think based on the last FinAccess survey, Kenya was at, I believe it's 84, 85%. So of course there's still room for improvement, but Kenya is doing quite well. So now, but what we did realize is that even though access was quite high, there's still a lot of challenges, on the ground. And so we like to look at inclusion based more on some different dimensions, and these are basically, are these financial products really benefiting the end users? And when we look at, when we break that down, we're looking at things around, are the services, are they relevant? Are they usable? Are they really relevant to the end users, to the customers? Are they affordable? And can they be trusted? And trust is very key. As a user, you want to be able to be sure, or to have the comfort that in case you send funds to the wrong person, it can be reversed within a reasonable time. Those kinds of things. You don't want your data being used for things that you did not intend it to be used for. So those are things around trust which are very, very key. So the scope of what we look at when we're talking about financial inclusion is quite broad. And so that said, we do see the role of SACCOs play a very key role based on their reach, especially out in the rural areas, because in some places, they're the only financial service point that people can reach. So we find their role very, very key. In terms of how partners and SACCOs can leverage these flows, several areas come up. When we talk about financial services, we're really seeing that there's certain key things that financial solutions and services should address. One is, are they really helping people manage day to day? So this is a huge around payments. Are they helping people be able to, pay and just manage their day-to-day way of life? A second area is, are these services helping people to manage shocks? And this is around if my crop has failed, how has my financial solution or service that I'm using, how is it benefiting or bringing me some value in terms of how I can manage my shocks day to day, or my, my livelihood, which is maybe my cow has died. Are these services that are really coming into people's lives to help people manage those kinds of shocks? And then lastly is the financial services should be helping people to invest for the future. So I want to start a business, I want to save for my child to go to college or to do a certain course. Are these financial products really out there serving people's needs and helping them do that? And definitely last but not least is around, Betty has mentioned that, another area that can be leveraged is around helping just bring knowledge to end users or customers. So this the whole area around financial literacy and digital education is very key. So those are just some of the areas that I think. And sorry, I must add that I think one of the key areas that is very key is that enabling environment. So in the domestic market, the environment needs to enable these things. So we're talking about things around, is there interoperability between systems? Because if remittances come in and I have to cash out to do anything, it really limits the kind of products that can be availed. Yeah, thank you.
Thank you. And this answer, I mean, especially the last part, I think is echoing some other answer in the morning. So I think interoperability is very key to enhance digital financial inclusion and more. So thanks a lot, Juliet. Final question for Peter. We already touched upon the shared platform, the SACCO shared platform Juliet mentioned when presenting the project. And we know that there is an ongoing discussion to set this central liquidity facility and shared platform to be connected with the national payment system. What we wish to know at this stage is beyond the status, that of course would be relevant for the audience, I guess, how can the facility foster a partnership agreement and additional synergies among the different financial players in Kenya, SACCOs, FinTech, and banks? What are the ultimate benefit for the end users at SACCO level, and what's the potential impact in terms of remittance provision? So over to you to tell us more about this plan that you are shaping. Thank you.
Thank you, David, for that question. To answer that question, I want to step back, and perhaps I think one of the data, as the study is a regulatory landscape, how facilitative, what are the barriers, that would be of interest in the study we're going to be doing now. The SACCO industry, as you speak today in terms of, I just want to give out some statistics. As you speak today, SACCO loans, which is, like I said, asset base of 5 billion, of which 80% is loans, we have about a third of that is in land and housing. We have the second is actually in education, social intervention, education across all the 8 universities. Then we have agriculture, small businesses, and then consumption and social services. Now, and this is to households and their small enterprises. You know, SACCOs deal with households and their enterprise, whether it's business now. And therefore we are looking, and this they are doing through about 400 points of service, which is 600 is their branches, the branch network, and 3,400 are through agencies' point of sale. Now, you can see that they are growing by leveraging on technology, because these points of sale is basically, leveraging on technology and mobile network. And the question, as we envision, we are saying our vision is to have financially inclusive, member-centric, and stable SACCO industry. And we step back, we ask ourselves, the inclusion Juliet has alluded from this last survey is about 83, almost 84%. But at the core of that is technology, digital finance. That is what is driving this inclusion. But also, the same report says the household, the costs from an efficiency perspective, we have not cracked that. We are still, cost in terms of, our cost of credit, accessing services is still. So we are, and therefore coming with the shared services, we are looking at how do we leverage on economies of scale, because each individual SACCO is building its own infrastructure. Betty has alluded to it. It's costly, inefficient use of capital. So we are telling SACCOs, you don't see a fellow SACCO as a competitor. And therefore we have had this conversation with over 50 SACCOs that you can come together to invest in technology infrastructure where all of you can plug. And that would be efficient use of capital. 2, the resilience from cyber or technological risk you can address from a central. This model has worked elsewhere. We don't need to, reinvent the wheel. We just need to, and solutions exist. If it's say InterSwitch, their infrastructure connects banks, connects SACCOs, and others. So we are telling them this is a model that exists in Kenya. We need to invest in a similar system, because we see whether it's any other provider, whether it's a bank or remittance operators, they'll just plug from one point and they can reach 50 SACCOs or 100 SACCOs. Economies of scale. And through that, then you'll also bring efficiency and standardized processes, because today, as you implement in one SACCO, the SACCO will insist, my processes are like this, my operation are like this. You will now start moving the industry to a maturity level where there are standard operating procedures across the industry. And that's really what. Now that will mean partnerships will be easier to plug in, because if it's remittances, if it's payment service providers, or even other products like, letters of credit, which SACCOs also have to seek through banks, they can actually be standardized and provided through the shared platform. So you see huge opportunities of deepening the reach for SACCO from financial inclusion. And for remittances, I think it even all these operators they partner with, it will be easier from
one standardized platform through which channels can be plugged, security monitoring can be centralized, and we have seen the studies we've done is that most advanced jurisdictions for SACCOs actually have reached that level, because SACCOs, due to the fact that they serve households and small businesses, may not have the huge capital to invest what possibly banks can. But by coming together, they are able to deliver services efficiently. And for households who are actually remitting, and also the beneficiary in the economy, then we see huge, benefits from, delivery of these services to them. So that's what drives us in this, and we can see it's going to be a win-win solution. And there are two that have been launched to date, and the one we have been coordinating the industry is working as well as support of World Bank. They provided us with support to do the scoping of technology, to do the study from these SACCOs, and I think the specs are ready. So as we go to the next fiscal year, then we are looking at going to market to actually, acquire the technology. But even that technology is leveraging on partnerships. It's not a question of putting, capital upfront. We are looking at partnering with providers like them to come and actually invest, and then the services can be accessed. That we think could bring a lot of efficiency and open opportunities for partnerships. And ultimately, the area like remittance will be much, much easier, because not just domestically, Pan-African, but also international money remittance will be easier to deal with one point of contact. Thank you.
One entry point to access SACCO partnership, basically, that's the envision, a plan for Sazura. Good, thanks. I think we can open the floor for a couple of questions, if any. Please introduce yourself and the organization. Yes. Over to you, yes.
Hi guys, I am Wangeshi Mathenge. An actuary at Inclusivity Solutions. What do? I design inclusive insurance products to bundle with other digital solutions. And I like SACCOs because of who they represent and the kind of access they give us. And I guess my question is to Romana. You talked about a platform that SACCOs can all plug into, and I think, Peter, you've talked about something similar. You are what I would call a super aggregator in insurance. And my question to you is, do you think as InterSwitch, you have a role to play when it comes to bundling remittances with other inclusive solutions like inclusive insurance? Is there a role for you to play given that you have all these SACCOs? Is that something you would think about?
Thank you. Just a sec. Let's see if there is another question. Please.
Good afternoon. Thank you to the panelists. Paddy Sianga-Knudsen from the Global Research Forum on Diaspora and Transnationalism. I was just thinking how it's very interesting from the previous session where we were looking at identification and financial inclusion and where sort of migrants and diaspora are portrayed as the risky client. And then when we come to this particular session, and I say that as a risky client, thinking about places where, we've talked about higher KYC requirements targeting migrants and diaspora. Of course, that's in sending countries, but also, for instance, from a receiving country perspective, where you're sitting here, where you look at sort of high interest rates that are charged to diaspora and migrants that are trying to invest back home. And then here in this session, we sort of see that widening of the door, right? It's like, this is the client that you're looking for, the diaspora and the migrants. So I'm also just thinking how the lessons are very important because it's the same side of the sector. And with that, I would say, where do you see your role then as a subsector in the financial sector, working on SACCOs, but also from the FSD perspective, in joining the advocacy that's really calling that we need to understand better the potential of migrants and diaspora in this particular market. So not just looking at the potential client, because other sessions have looked at the bigger problems where they are, but how do you join that space in advocating for your new potential client? Thank you.
Okay, Romana, and then I believe the question from the second question from the audience is for Juliet. Romana?
Yeah, thank you very much. You're right. We need to be able to bundle solutions like, insurance into remittances, etc. But right now, we're grappling with a fundamental problem in this country, and that is bringing people together to share assets. We have to change the mindset from everybody has to have his own little kingdom with his systems. Good tech is expensive, secure tech is even more expensive. And to build good products, you must have an infrastructure to do so. So my big concern is to put in that infrastructure, and I'll let you in on a little secret. This is something we've been working on for years. But finally, when talking to the regulator, the central bank, they have agreed that we work together with FSD and other players in the market, including Sastra, including banks, including fintechs and other switchers, so that we can come together in Kenya and work on our domestic scheme. Now, if you know in other countries, like if you go to South Africa, you go to Nigeria, you go to Egypt, they have domestic schemes where all the assets are interconnected. Now, when we have our assets interconnected and anybody can access those assets, when I say anybody, of course, within certain rules and regulations, then it is possible to build and provide those products. But it is an extremely good idea that we should be enriching our remittance products to include things like insurance. I heard that they're doing that in other parts of West Africa. We heard in the previous session. And certainly we can do that in Kenya. The capability is there, but we must solve the fundamental problem of shared infrastructure first.
Thank you, Romana. Juliet and Peter, or Peter and Peter? Okay.
Yeah, thank you. I think what, as we speak today, Kenya, we've been promoting aggressively diaspora circles, whereas Kenyans who are resident out of Kenya register circles in Kenya. We have Kenya, US diaspora circles, we have Qatar, North America, a number of them, and there are 4 we have licensed. And going to the question of shared platform, we are actually challenging them that they really need to think of investing in a shared platform because of multi-currency and all that, because each again is settling. And that provides a back office. Can you have a back office here, which from wherever you are, one platform, then you can access. So there is that already, that space. And I would even add that this field administration is very specific on tapping to the diaspora market. And we have seen a dedicated, department on diaspora. And we're already in conversations with them to address challenges that diaspora circles are facing. They have written a memorandum on how we can tap their resources and addressing the barriers but therefore, it's a conversation that is already happening to see how do we deepen this reach. And that will, of course, will also open opportunities for, again, migrants. So I see opportunities, how, already the work that has happened in diaspora. We have also seen, attempts to actually see how do we bring these, in a more structured way. Because right now, I think we had over 20 of diaspora circles, and we can see some of them, their focus and all by policy guidance collapsing to a fewer. But our main push, we are telling, it is very difficult for us to deal with. You go to North America, you find like 5, 10 of them. Why don't we create a platform where a shared platform, and that's why we believe shared platform will make it more efficient for, regardless of which part of the world you are in, you can actually plug in and access and have a line of sight on your accounts and how you relate with your circle, because we've realized some of the challenges they face is basically operational efficiency, which again technology can address. So there's a huge opportunity on that space. Yeah.
Thank you, Juliet. If you wish to add something.
Okay, I think Peter has already addressed most of it, but I just wanted to add that actually that's one of the key things that we're going to be doing in this, the work that we're just starting now with Sastra and the circles is, I think I mentioned it very briefly, is really having some in-depth interviews with key stakeholders and these are the associations, and there's several of them, as well as these diaspora circles that Peter has just mentioned. So that's just one of the ways that we're starting to pull in these associations and bring them into. So there's a lot, I believe there's a lot that we can learn from them. Yes, thank you.
Good, thanks. I think for interest of time, it's good to recap the session. I noted down 4 major points that our panelists highlighted. So first one, SACCO evolution is driven by the demand from the customers. Number 2, banks and SACCO can enhance their collaboration with a focus on remittances, and the new SACCO shared platform can provide additional space for collaboration. Number 3, liquidity, IT readiness are key elements for SACCO to partner with bank. And number 4, fintech are crucial to bridge the gap between banks and SACCO in many operational areas. With that, I wish to thank our panelists with a round of applause. And I wish also congratulate with you to be with us until 6 o'clock at the second day. So I think a big round of applause for yourself as well. You deserve it. And I'm happy to invite you to get together and to socialize in the cocktail reception that Tunes offered today. So it's time to get together and have a good talk. So thanks again. Tomorrow the program will start again at 9. Thank you again. Bye, good evening. Picture, yes, for us, yep.
I'm the one with the color. Let me be in the middle.
That's right. How many lights? Let's see the main photographer, the hands. Okay, and then we can let me see here. Okay?
Well done.
Thanks a lot.